Good afternoon, warriors. Which chapter are we in, ma? Okay. We're done with question 1, 2, 3 also, right? Let's start with question number 4. Read the question. Hello. Yeah. Okay. Let's read the question. It says Mrs. Harshita purchased the land at the cost of 35 lakhs in financial year 4-5 and held the same as her capital asset till 20th March 2022. Okay. She started a real estate business on 21st March and converted the said land into stock in trade on the date. Where are we? We are conversion of capital assets to stock in trade. You purchased the capital asset in the year 4-5, held the same as capital asset till 20th March 22. Your previous year, previous year. Previous year. She started her real estate business on 21st March and converted the same land into stock in trade on the business as on said day. Okay. When the fair market value of the land was 210 lakhs. First the capital gains is going to come, then PGBP is going to come, because of which what will happen? Defer will happen. Correct? Capital gains will get deferred until the date on which the stock in trade is sold. She constructed 15 lands of equal size, quality and dimension. The cost of construction of each flat is 10 lakh rupees. Construction was completed on February 2023. Your previous year, previous year. Your previous year. She sold 10 flats at the rate of 30 per lakh in March 2023 and the remaining flats were left as unsold stock on 31st March. Will you tax the whole capital gains of land today? How much will you tax? 10 by 15. She invested 50 lakhs in bonds issued by NHAI on 31st March and another 50 lakhs in REC on April 23. Same asset, two different investments happening. You can claim maximum 50 lakhs. You are required to compute the amount of capital gains chargeable to tax and the business income chargeable to tax in the hands of Mrs. Harshita arising from the above transaction for AY 23-24, clearly indicating the reasons for each item. CII for 4-5 is given as 113 and 21-22 is given as 317. You have two kinds of transaction in this. One is called as your capital gains, the other is called as your PGBP. Yes or no? Which one is easy? PGBP is easy. Let's do PGBP. What does the question come and say? She constructed 15 flats of equal size, quality and dimension. The cost of construction of each flat is given as 10 lakh rupees. So cost of construction of the building is given as 10 lakhs, correct? Per flat. Per flat it is given as 10 lakh rupees. Construction was completed on February 23. She sold 10 flats at the rate of 30 lakhs. So this is your full value of consideration. The remaining 5 flats were left unstocked. Now the problem what you have is you have the full value of consideration of the flat. You have the construction of the building cost. But what you don't have the cost of the land. Correct? You don't have the cost of the land. The provisions in capital gains come and say that whenever you are converting a land into stock in trade, you will treat the fair market value of the land. What is the fair market value of the land given? 210 lakhs. This 210 lakhs is for all the 15 flats or is it for 10 flats alone? It's for 15 flats, which means you need to take for 10 flats. Number is 210 lakhs into 10 by 15. Number is 140. Yeah? 140. Okay. Above items are per flat, so let's multiply it into 10. So this will become 300 lakhs. This will become 100 lakhs. Correct or not? So 200 lakhs, 100 lakhs and then 60 lakhs is the answer. Correct? Matched? Yes? Can we go forward? Yes, this is your PGBP. Coming to the capital gains component, what is happening? What is happening? You have a conversion of capital asset into stock in trade. You need to first find out the full value of consideration. What is the full value of consideration? It is the FMV. FMV is what? 210 lakhs. But 210 lakhs is for 15 flats. Are you going to tax all the 15 flats? No, you are going to tax only 10 flats. So it will be 210 into 10 by 15. Number is 140. You have it from the top. You have it from the top. Less cost of acquisition. Number is, what is the cost of acquisition, people? It is 35 lakhs. But the problem is 35 lakhs is for 4-5. This is a long-term capital asset because you have held it for more than 24 months. Held it for more than 24 months. It's not 36. It's immovable property. It is 24 months. Look at the cost of inflation index. It comes and says it is. Will you take 331 or 317? Will you take 331 or 317? 317. Why? That is the year in which the conversion happened. So that is the year in which the tax will be computed. So it is 317 divided by 113 into 10 by 15. Yes, sir. By, again, you are only selling 10 flats. Number. $65.45. Two decimals are okay. 65.45. What is happening? This is your cost of acquisition indexed. Therefore, the answer will be called as long-term capital gains under section 112. Number is 74.55. Question somewhere comes and says that, boss, you have taken the capital gains and you have invested in NHAI bonds and REC bonds. You have to invest within a period of 6 months. Within a period of 6 months. 6 months from the date of transfer. But the problem is transfer happened on 20th March 22. 20th March 22. Is it satisfying the 6 months condition? It is. It is. I told you, whenever there is a deferment of tax, your investment period will start from the date on which the tax is collectible. Tax is collectible. When is the tax collectible? It was sold in March. So you'll start 6 months from March. So March, April, May, June, July, August. So until August you can make the investments. He has made the first investment on 31st March within 6 months. Next investment is made in April, again within 6 months. Total is 1 crore. Can you claim the full 1 crore? No, you can only claim 50 lakhs. Claim only 50 lakhs. Therefore, your capital gains is 24.55. Clear? Clear? Shall we? So the capital gains is 24.55, the PGBP 60 lakhs. Okay. Which question are we in? Question number 6. Singhani and Co. sole proprietorship is owning 6 machines put to use in the business on March 2021. The depreciation on these machines is charged at 15% rupee. The written down value of the assets are given as 8,50,000. Opening WDV is given as 8.5 lakhs. Okay. 3 of the machineries are sold on 10th June 2022 for 11 lakh rupees. So the sale consideration is given as 11 lakhs. A second-hand plant and machinery was bought for 8,50,000 on 30th November. You have an addition. More than 180, less than 180. Less than 180. Number is 8,50,000. Your block will show as 17 lakh minus 11 lakh, 6 lakhs. Correct? Your block will show as 6 lakhs. You are required to determine the claim of depreciation for the assessment year 23-24. I told you, whenever you have a sale consideration, it will first be reduced from the opening block, then it will take to the balance. So 11 lakhs and the 8,50,000 fully gone. Mitchell left is 6 lakhs in your addition more than 180 days. It's an asset second hand machinery, therefore you will only get normal depreciation. The number is 6 lakhs into 7.5%, which is 45,000. Done. Compute the capital gains liable to tax. What is the capital gains liable to tax? Zero. Capital gains liable to tax is 0 because depreciation is fully claimed on the asset. If Singhani and Co had sold the 3 machineries for 21 lakhs, will there be any difference in the workings? What would have happened? This 11 lakhs would now be 21 lakhs. If it was 21 lakhs, the block will cease to exist, which means depreciation will become 0. Capital gains will be 21 lakhs minus 17 lakhs. Number is 4 lakhs. Yes? Clear? Tell me, go forward. Yes, next question. You are required to compute the income tax liability for the assessment year 23-24 for the following transactions. Mr. A is given as the age of 45 years, is the resident, has a total income of 2,40,000 without any kind of long-term capital gains, and then he has a long-term capital gains of 15,000 from sale of a vacant site. 112 or 112 112. 112 is 15,000 rupees. You are required to compute the tax. Go ahead. A question says you are not opting for 115 BSc, so you are safe. Done, time's up. Number 3 to 3,000. How did you get it? Wrong. 10. How? What is 5,000? Very good. You have a basic exemption limit. Basic exemption limit has to be utilized. 15,000 in the 10,000 will go there. Correct or not? Balance is 5,000. Tax is 0. Why tax is 0? You are eligible for rebate. In the 15,000, 10,000 will go to the basic exemption limit. Left off is 5,000. 5,000 into 20% will give you 1,000 rupees. Allow rebate for 1,000 rupees. Answer becomes 0. No cess on it. Done. You are a non-resident with a total income of 2,80,000. Long-term capital gains is 10,000 from the sale of listed shares. What do? Long-term capital gains tax will become 0 because it's not more than 1 lakh. Coming to the top, 2,80,000 is there. Reduce 2,50,000. Balance is 30,000 at the rate of 5%. Number is 1,500. Will you claim rebate? No. Non-resident, no rebates for you. Allowed cess of 4%. Number is 60. Total becomes 1,560. Next one. You are a resident with a total income of 5,90,000 and 60,000 is from sale of agricultural land in rural areas. $30,500. 31,500. 720. 18,720. Rebate Kutia. Huh? You are a resident with an age of 81 years with a basic exemption limit of 5 lakh rupees, leaves you with a balance 90,000 at the rate of 20%. Number is 18,000. Number is 18,000. Add cess. What happened to the capital gains? Agriculture lands are not exempted. They are liable for partial integration. They are liable for partial integration. Fortunately, in this question, the answer will not change. Fortunately, in this question, the answer will not change because the slab is not changing. Because the slab is not changing, the tax on both the items are 20%. Therefore, you are safe. Therefore, you are safe. First day, whenever it comes to agriculture income, the answer is not exempt. The answer is, please keep it in mind. 18,000 into 40% will give you, 4% will give you 720. Number becomes 18,720. Careful about small things, people. Next one. You are a non-resident with an age 82 years. Your total income is 4,80,000 rupees. Straightforward question. $11,960. What did you do? You reduce 2.5 lakhs. Correct? You reduce 2.5 lakhs. Balance is what? 2,30,000 at the rate of 5%. Number is 11,500. Will you claim rebate? No rebates for you. Allow for cess of 4%. Number is 11,000. Small things, people. Be careful about it. Okay. Can we go to the next one? Next one. Important question from exam perspective. Look at it carefully. Okay. Question comes and says, Mrs. Yuvika bought a vacant land for 80 lakhs in May 2005. Registration and other expenses incurred were 10% of the cost of land. She constructed a residential building on the said land on 100 lakhs during the financial year 7-8. Okay. She initially had a land. On that land, she incurred some registration charges, and then she also made a building on that land. The building was made in FY 7-8. She entered into an agreement for the sale of the above land residential house with Mr. Johar, who is not a relative, in April 2016. The consideration was fixed at 700 lakhs on 23rd April 2016. Yuvika received 20 lakhs as advance in cash by executing the agreement. However, due to failure on the part of Mr. Johar, the said negotiation could not materialize and the said amount was treated as forfeiture. What to do with this? Ignore the transaction. Why? It was after 2014. The tax will be collected in the year 2016 itself. We are in 2022. We are in 2022, not relevant for us. Okay. Mrs. Yuvika again entered into an agreement on 1st August 2022 for the sale of the house at 810 lakhs. Consideration now is 810 lakhs. She received 80 lakhs as advance by RTGS. Okay. The stamp duty value on the date of agreement was given as 890 lakhs. The sale deed was executed on 14th January 2023 when the stamp duty value of the property was given as 900 lakhs. Initially, you took the agreement on 890 lakhs. Now the agreement is 900 lakhs. You will check for which of the two. Check whether there is an advance. Is there any advance? Yes. Is it by permissible modes? Yes. Therefore, the sale consideration, the stamp duty value to be taken is 890. You will compare 890 with 810, whichever is higher. But the problem is you need to check for 110% of consideration. 810 ka 110 is pota evlo varthu 890. 1 is coming, which means the provisions are not applicable. Therefore, your full value of consideration is 800. Clear? Next. Where are we? Mrs. Yuvika paid 1% as brokerage charges on the sale consideration received. This is nothing but your number is 1% of 810. 1% of 810, which is 8.1. Net consideration is your net consideration is 801.9. Cost of acquisition yet to determine. Hold. Okay. Mrs. Yuvika made the following investments. She acquired 2 residential house properties for 130 lakhs and 50 lakhs on 31st January and 15th May. We are in section number 54. In 54, you can make a purchase in 2 properties provided the LTCG is more than less than 2 crores. This is what 8 crores. Huh? 8 not 1.9 na evlo? 8 crores. It is right now 8 crores, but we need the LTCG, not the net consideration. So let's hold the question. Acquired a residential house at UK for 180 lakhs. 54 comes and says RHP should be in India. RHP should be in India. So ignoring UK. Ignoring UK. Subscribe to NHCI bonds for 50 lakhs on 29/3/2023 and 40 lakhs for 12/5/2023. First, let's understand when is the sale happen. When does the sale happen? 14 January, which means within 6 months you need to make the investment. 14 January in the 6 months pota. It will become 14th August. It will become 14th August. You made the first investment in March, second investment in May. Both are within the timelines. You can claim a maximum of 50 lakhs. You are required to compute the income chargeable under the head capital gains for Yuvika. The choice of exemption should be in the manner most beneficial to the assessee. Cost inflation index is given as 117, 78 is 129 and 22/23 is 331. See, understand the problem here. You have 2 cost of acquisitions. One is for the land, one is for the building. Both happen on different dates. So the indexation will also happen differently. So what do you do? First for the land. First for the land. Land was purchased when? 2005. When you purchased the land in 2005, you paid what cost? You paid 88 lakhs. You paid 88 lakhs because 80 lakhs is the cost, 10% is your registration charges. Therefore, it becomes 88 lakhs into 331 divided by 117. Huh? 117. Number is, sorry ma, 248.95. Okay. Second is your cost of building. Building was made when? It was made in 7/8. Cost is given as 100 lakhs. So it is 100 into 331 divided by 129. Number is 256.58. 256.58. Remove the 2. Get me the final LTCG. No, ma, it's 296.37. It's in lakhs, you cannot round off. Okay, so it is 296.37. With this, you will understand that your capital gains is more than 2 crores. It is more than 2 crores. Can you claim 2 house properties? No, you can only claim 1 house property. Question to you. Point number B cannot be claimed anywhere, which means you have point number A. In point number A, you have 2 properties. One is 130 lakhs, one is 50 lakhs. Which one will you prefer? Claim whichever is highest. 130 lakhs will be allowed as an exemption under 54. Apart from that, you also have an exemption under 54 EC. Number is 50. Reduce 180 lakhs. Number will become 116.37 lakhs. 116.37. Clear? Yes, this is how you approach the question. But in exam, this will not fetch you marks. The marks which will be fetched is for the notes. You will have to give explicit, clear notes for every item. When you started from SDV, you came and told that it is 890. How did you arrive at the 890 and not 900 is first note. Second, you need to come and say, why did you choose 810 and not 890? Then you need to bring in your cost of transfers, and then you need to come and say, boss, for the cost of the land, you have to include the registration charges and then do an indexation. For building also, you have to do an indexation. Why are you doing indexation? Because the property is held for more than 24 months. Adu or no. Okay, then you need to give your exemptions. In exemptions, you need to first clarify that your UK property cannot be considered, and the other property you are only considering 130 because capital gains is more than 2 crores. Then you need to also give the second note and come and clarify that 54 EC you can only claim 50 lakhs. Motto kudutha da unakku 8 mark. Okay, illana gali pochu 3 marks da only. This whole format will only carry 3 marks. Balance 5 marks is for your theory. Careful. Okay, next one. Mr. Shiva purchased the house property on February 15, 1979. February 15, 1979. Before 2001, after 2001. What do you do? Check FMV as on 2001, whichever is higher. In addition, he has also paid stamp duty at the rate of 10% on the stamp value of 3 lakh 50,000. This is a stamp duty charges paid from his side, will be added to the cost. Technically, what is your cost? 3,24,000 plus 10% of 3 lakh. 3,24,000 plus 35,000. எப்படி வந்துச்சு உனக்கு 380? 3,59,000. Your cost of acquisition, actual cost of acquisition right now is 3,59,000 as of now. Let's read the balance question. In April 2008, Shiva entered into an agreement with Mr. Mohan for the sale of property on 14,35,000 and received 1,11,000 as advance. What is going to happen? Forfeiture is going to happen. However, the sale consideration did not materialize and Shiva forfeited the advance. Sandosham. When did you forfeit? Before 2014. What will you do with this? Reduce it from the cost. As of now, we don't know the cost. I am assuming it is 3,11,59. So I am reducing it from here. As of now. Okay. In May 2014, he again entered into an agreement for the sale of said house for 20,25,000 to Mrs. Deepshika and received 1,51,000 as advance. What is going to happen? Same forfeiture is going to happen. However, Deepshika did not pay the balance amount and Shiva forfeited the advance. This forfeiture happened after April 2014. Therefore, this will be IFOS. Relevant information, not relevant information. Not relevant information. In August 2015, Mr. Shiva constructed the first floor by incurring a cost of 3,90,000. What is this? Cost of improvement. 3,90,000. In November 15, 2022, your previous year, your previous year, which means sale is going to happen now. November 15, 2022, Shiva entered into an agreement with Mr. Manish for the sale of such house for 30,50,000 and received an amount of 1,50,000 as advance through account pay check. Mr. Manish paid the balance entire sum and Shiva transferred the house on February 20. Mr. Shiva paid the brokerage of 1% of the sale consideration. What is the sale consideration? 30,50,000. So therefore, cost of transfer is 30,500. 1% of the 30,50,000 cost of transfer is 30,500. I am just putting my information. I have not put the format, just plotting out my information. Okay. On April 1, 2001, the fair market value of the asset was given as 11,85,000 and the stamp duty value is given as 10,70,000. You will choose whichever is lower. You will do FMV or SDV, whichever is lower, compared with the actual, whichever is higher. In these two, the lower is 10,70,000. That will be compared with 3,59,000, whichever is higher. Therefore, your new cost is now becomes 10,70,000. Now in this, you are going to reduce your advance forfeiture. Number will become 9,59,000. Right up. So your new cost of acquisition is 9,59,000. Your cost of improvement is 3,90,000. Cost of transfer is 30,500. We now need to figure out what my stamp duties are. Correct? Because the sale consideration is with me. Further, the valuation as per the valuation authority on 15th November is given as 39 lakhs. On 15th November is given as 39 lakhs and on 20th February is given as 41 lakhs. Which one will you consider? You will consider which one is 39 lakhs. You will consider 39 lakhs because you paid advance and that is done by that is done by permissible modes. Therefore, your stamp duty value is now 39 lakhs. 39 will be compared with 30,50,000. 110% will not go beyond 39 lakhs. 30,50,000 மேல 10% போட 3 lakhs தான் வரும். 3 lakhs தான் வரும். Technically meaning SDV is more. So therefore, your stamp duty value is now 39 lakhs. Your cost of transfer is 30,500. Net consideration is 38 lakh 69,500 less cost of acquisition. We found out that my cost of acquisition is 9,59,000. This asset was purchased before 2001. Therefore, you directly multiply by 331 divided by 100. Number is 317,429,0. 31 lakh, don't reduce, wait. You have one more item called as cost of improvement. Cost of improvement is given as 3,90,000. When did you do the improvement, people? 2015, August 2015. Therefore, you will take 254. So 3,90,000 into 331 divided by 254. Number is 38,69,500 minus 31,74,290 minus 5,08,228. Will you round off? No, don't round off. Question is only asking you for capital gains, is not asking you for total income. Done? Clear now? You understand how the format works? Mr. Suraj sold a house to his friend Mr. Ganesh on 18 September 2022 for a consideration of 42 lakhs. On the date of registration of the property, the stamp duty value was 45 lakhs. However, on the date of agreement, the property was 44 lakhs. On agreement, it was 44. On registration, it is 45. Which one will you consider? Check the information. Mr. Ganesh paid 10% of the value of the property by account pay check on the date of agreement. You have paid token money, you have paid it by permissible mode. Therefore, stamp duty value now is 44 lakhs. 44 will be compared with 42 lakhs. 44 will be compared with 42. 42 ku 110% put up 46.2 varona negra. 46.2 vardu, which means consideration is, stamp duty value is within 110% of consideration. Provisions will not apply. Your full value of consideration is 42 lakhs. Your full value of consideration will become 42 lakhs. Correct? Where are we? Assume value of the land is 70% of the total value of the property. Why is this relevant? Okay. Let's read the question. Assume the value of the land is 70% of the total value of the property. What are the tax implications in the hands of Mr. Suraj and Mr. Ganesh for 23-24? If Mr. Suraj had purchased the land in 2016, whereas built the house in 2021, there is a problem in the question. The problem is that the land is purchased in 2016, which means the land is held for more than 24 months, which means the land is long term. But the problem is the building is made in 2021, which means the building is less than 24 months, which means it is short term. Same property, you have long term and short term also. That is why they gave a split. That is why they gave a completed the construction of the house on 18th January 21. Okay, that is why when you have two kinds of nature, you need to split your sale consideration also. So they came and said, boss, 42 lakhs pertains to 70% to land and 30% to building. So we need to do two different capital gains, land and building. 42 into 70% will give you 29, 45, balances 40, 12.6. Your sale consideration is given as 29 and 12, less cost of acquisition. Problem is in land it will become indexed, and for building it will be normal. So building, you know, building cost is 15,50,000. 15,50,000. Coming to land cost is given as 9,20,000, purchased in 2016. Therefore, you will do 9,20,000 into 331 divided by 254. Number is 11,988,97 98 11,98,898. 29,40,000 minus 11,98,898. Number is 17,41,102. 102, right side. 2.9 lakhs of loss. 2.9 lakhs of loss. Your loss is from short term or long term? Short term. Can you set off your short term capital loss against long term capital gains? Yes. Ulta scenario not possible. The reverse scenario possible. So therefore this will be set off and your capital gains will now become 14 lakh 51,102. 14 lakh 51,102. Okay. Getting a hang of capital gains. Mr. Rajan provides you with the following information with regards to the sale of securities by him. Sold 10,000 shares of A Limited on 5 April 2022 at the rate of 650 per share. A is a listed company. Shares were acquired by Rajan on 5/4/2017 at the rate of 100 per share. You acquired it before 2018. You acquired it before 2018. Cost is given as 100 per share. STT was paid both at the time of acquisition and transfer. On 31st January 2018, the shares are given to you. Highest price is 300, average is 290, lowest is 280. You will take 300. You will take 300. How do you compute the new cost? You do actual consideration, number is 650 versus FMV, number is 300, whichever is lower. Whichever is lower. Answer is 300. This will be compared with the actual cost of 650. No, actual cost of 100, whichever is higher. Whichever is higher, therefore it will become 300. Therefore it will become 300. Your sale consideration is 650. Your cost is 300. Your long term capital gains is 350 into 10,000 shares. Will you give indexation? Will you give indexation? Huh? No. Day 112A, no indexation. 112A, no indexation. Therefore, no indexation for you. 350, 1, 2, 3, 4. Number is 35 lakhs. Next one. Sold 1,000 units of B mutual fund on 20th April 2022 at 50 per unit. B mutual fund is an equity oriented fund. These units were acquired by Rajan on 2017 at the rate of 10 per unit. STT was paid only at the time of transfer. On 31st January, net assets value is given as 55 per unit. Same logic. Actual consideration is 50. FMV is 55, whichever is lower. Number is 50. Compare with the actual cost. What is actual cost? 10. Actual cost is 10, whichever is higher. Therefore, it is consideration is 50, cost is also 50, gains will become 0. Done. Sold 100 shares of C Limited at 200 per share. C is an unlisted company. These shares were acquired in the form of bonus on 30 September 1997. The fair market value of the shares on 1st April 2001 is given as 50 per share. Cost inflation indexes are given to you. Bonus shares, cost will become 0, but the shares were given before 2001. So you will do actual cost or bonus, whichever is higher. Sorry, actual cost or FMV, whichever is higher. Actual cost is 0, FMV is 50, therefore cost becomes 50. Sale consideration is what? 200. Sale consideration is 200. So full value of consideration is 200. Cost of acquisition will be indexed because period of holding is more than 24 months. Period of holding is more than 24 months. Cost of acquisition will be 50 into 331 divided by 100. 165.50. 34.5. 34.50 is your gains into how many shares? 100 shares. 3450 is your gains. 3,450 is your gains. Clear? Clear? Yes. Read the question. Calculate the amount of income chargeable to tax under capital gains. Ada panito. First answer is 35 lakhs. Second answer is 0. Third answer is 3,450. Also calculate the tax on such gains for the assessment year 23-24, assuming that the other income of Rajan exceeds the amount chargeable to tax, ignoring surcharge and cess. Ignoring surcharge and cess. 35 lakhs is your 112A income. Reduce 1 lakh rupees, it will become 34 lakhs into 10% will give you 3,40,000. Next one is 0, so the answer is also 0. Third one is 3,450 multiplied by 20% because it is 112. Unlisted shares into 112, number will become. Why did you not include surcharge and cess? Step number 1. Done. Completing capital gains, we are now into reorganization. Sorry, we are into distribution of owners. We are into distribution to owners. Question says, Mrs. Vasumati purchased 10,000 shares of ABC Company Private Limited on 28th February 2006 for 1,20,000. The company was wound up on 31st July 2022. You are in liquidation. You are in liquidation. The following is the summarized financial position of the company on 31st July. You have some agricultural land of 42 lakhs, cash at bank of 6,50,000, equity shares are 6 lakh rupees, general reserve is 40 lakh rupees, provision for taxation is 2,50,000. How many shares are there in the company? 60,000. How much does Vasumati own? How much is her share ratio? 1/6. Keep this in mind. It is 1/6. It is 1/6. The tax liability was ascertained at the rate of 3 lakh rupees. The remaining assets are distributed to the shareholders in the proportion of their shareholding. Market value of 6 acres of land is given as 10 lakhs per acre. 10 lakhs per acre. This 42 lakhs is nothing but 6 acres of land. Per acre they are going to cost you 10 lakh rupees. Per acre they are going to cost you 10 lakh rupees. The agriculture land which was received by Vasumati was sold for 15 lakh rupees. You are required to discuss the tax consequences both in the hands of company and in the hands of Vasumati. Cost inflation indexes are given to you. First of all, are we good to go? No, we are not good to go because the problem is the balance sheet which you have right now is raw. The balance sheet which you have right now is raw. Somewhere in the middle they have come and say the tax liability is 3 lakh rupees, which means this has not been factored inside. If you remember Companies Act, they would have come and told you whenever liquidation happens, the first payment goes to tax authorities. First payment goes to tax authorities. Whatever is left off is what goes to shareholders. Correct or not? In this, in my books, I have made a provision of only 2,50,000. But the provision required is, so I will have to first correct my books. What is the entry which I'll pass? What is the entry I'll pass? P&L to provision. First entry which I'll pass is P&L to provision. How much? 50,000. Yes or no? Yes. Second, I have now created a provision of 3 lakh rupees. Can I keep the provision just like that and make the balance payment to my Vasumati? No. What I need to do? I need to first pay it out. So what is the entry I'll pass? Provision to cash or bank, whatever it is. Number is 3 lakhs. Number is 3 lakhs. Have you completed all your entries? Have you completed all your entries? Yes. With the entries which you have completed, now prepare a new balance sheet. Prepare a new balance sheet. How does it look like? Will 6 lakhs undergo change? No, 6 lakhs will remain same. Will general reserve undergo change? Yes. Why? You have passed the P&L entry. This will now become 39,50,000. 39,50,000. Will provision for tax undergo change? It will become 0. It will become 0. Will agriculture land undergo change? Will agriculture land undergo change? No. Will cash at bank undergo change? Number will become 3,50,000. Done. Done. With this, your balance sheet is now clean. Having this information in mind, what they are coming and saying is the remaining assets were distributed to the shareholders in the proportion of their shareholding, meaning every shareholder got in the ratio of their shareholding. In this case, what is the assets which you have now? A land and cash. You have a land and a cash. Now, agricultural land, how much will Vasumati get? 1/6. How much will Vasumati get? 1/6. How much of cash will Vasumati get? Same, 1/6. So, how much is the cash which she receives? 58,333. How much is the land which she receives? The value in your books is historical cost. The value in your books is historical cost. Accounts works on stupid logics. Okay, those logics are not relevant for income tax. Income tax talks about fair market value. Fair market value of the land is given as 10 lakhs. 6 acres are there. 1 acre is going to go to Vasumati. So she has got 10 lakhs worth of assets. How much assets did she totally get? 10 lakh 58,333. Yes or no? This is the total assets which she got. Now, when it comes to liquidation, we have two kinds of taxability. One is under IFOS, the other is under capital gains. IFOS will be taxable to the extent of accumulated profits of the company. Accumulated profits of the company. Tell me, is Vasumati the only person receiving this, or is every shareholder going to receive? So, reserve and surplus should also be distributed amongst every shareholder. 39,50,000 is into 1/6 for Vasumati. 658,333. This number will become your IFOS income. Yes or no? This number will become your IFOS income. So, what is your consideration for the purpose of capital gains? 4 lakhs. What is your consideration for the purpose of capital gains? 4 lakh rupees. Now that you have your consideration, you will reduce cost of acquisition. ICOA. Why ICOA? Why ICOA? Shares were held in 2006. You have crossed 24 months. You have crossed 24 months. Number is 1,20,000 into 331 divided by number is 480. Therefore, your capital gains from the liquidation proceeds is 513, 60,513. This is from your liquidation. What is the amounts of taxability for liquidation proceeds? You have an capital gains of long term of 60,513 and you have an IFOS income of 6,58,333. What is the tax in the hands of company? Nothing. Everything is taxable in the hands of shareholder. But then the question also comes and says that, boss, whatever land Vasumati received, she actually sold it for a price of 15 lakh rupees. So you have a second capital gains coming into picture. Full value of consideration is what? 15 lakhs. Cost of acquisition is what? 10 lakhs. If you have already taxed the 10 lakhs as your sale consideration, that automatically becomes your cost. It automatically becomes your cost. Why are we not indexing? Because you have sold it in the same year. You have sold it in the same year, therefore it is a short-term capital gains. Your indexation will not be eligible. Therefore, your new capital gains is 5 lakh rupees. This is your short-term capital gains. So, what are the incomes taxable for Vasumati in the current year? You have an IFOS income of 6,58,333. You have a short-term capital gains of 5 lakh rupees and you have a long-term capital gains of 60,513 rupees. Done? Clear? Yes? Last question. Mr. A is the proprietor of Akash Enterprises having unlisted share, no ma? லிஸ்டட் ஷேர் இருந்தால் 112 போகும். Mr. A is the proprietor of Akash Enterprises having 2 units. He transferred 1/4/2022 his unit 1 by way of slum sale for a total consideration of 25 lakhs. We are into slum sale now. We are into slum sale now. The fair market value of the property is given as 30 lakhs. You will take 25 or 30. You'll take 25 or 30? 30. Slum sale பொறுத்த வரைக்கும் you have to sell it at minimum of fair market value of the assets transferred. If not, you will take it as fair market value. Number is 30 lakhs. So your full value of consideration is 30 lakhs. Unit 1 was started in the year 2009-10, meaning this is a long-term asset. The expenses incurred for transfer is given as 28,000. So cost of transfer is 28,000. What is the net consideration? 29 lakhs 72,000. The balance sheet of the company is given to you as under. You are going to sell unit 1 or unit 2? Unit 1. You are going to sell unit 1. You will look at only unit 1 or you look at for the whole balance sheet? Look at only at unit 1. That's enough. Unit 1, first number is given as buildings of 12 lakh rupees. I don't know what to do. Hold. Next number is given as machinery of 3 lakh rupees. I don't know what to do. Hold. Third item is given as debtors of 1 lakh rupee, other assets of 1 lakh 50. On the left side, they are coming and saying there is a revaluation reserve for the building of 3 lakh rupees. Technically means what? Building was actually purchased at 9 lakh rupees. You created a revaluation reserve on it and made it 12 lakh rupees, which means building should be considered at a price of yes. Next one. Bank loan is given to you. Bank loan is 2 lakh rupees, out of it 70% pertains to unit 1. Therefore, unit 1 bank loan is 1 lakh 40,000. Trade creditors is given as 2 lakh 50,000. 25% of that pertains to unit 1. Therefore, trade creditors is 37,500. What I don't know right now, I don't know what to do for machinery, debtors and other assets. Let's read the other information. Other information is coming and saying revaluation reserve is created by revising upward the value of buildings of unit 1. Adha naanga panitom. You've already done it. No individual value of any asset is considered in the transfer deed, basically telling this is a slum sale. Not relevant. Machinery reflected at 3 lakh rupees in unit 1 represents written down value as per books. The written down value of these assets as per income tax is given as 2 lakh 90. You will take 2.9 lakhs. The other assets of unit 1 includes a patent of 1/7/2020 for 50,000 on which no depreciation was charged. They have a patent inside the other assets. They forgot to charge depreciation. Will you let it go? Will you let it go? No. You will say it is your mistake. You did not charge depreciation. I will charge depreciation. Meaning debtors no information is given. You can retain debtors as is. You can retain debtors as is. Coming to other assets, you have 2 kinds of assets. 1 lakh 50,000 has to be broken up, correct? First is 1 lakh. The other is 50,000. Will you do anything for 1 lakh? No, which means take 1 lakh as is. Take 1 lakh as is. Come to the 50,000. 50,000 was purchased in 2020. It was purchased in 2020, which means you need to give depreciation at the rate of 25%. You have to give depreciation at the rate of 25%. For financial year 2021, you will give full 25% because it is put to use for more than 50,000 into 25% is 12,500. This becomes 37,500. 21, 22. Again another 25%. SDV, SLM or WDV? WDV method. Another 25% number is 9,375. Balance 125. Will you give the depreciation for 22-23? Will you give the depreciation for 22-23? You will not give it for 22-23, or will you give it for 22-23? You will give it. When did you transfer? 1422. You have transferred at the start of the year itself, which means depreciation not required. Depreciation 22 or 23 this is. Hey, 22 is your previous year, next to previous year. Then you will not give. Then you will not give. Had it been 1/4/2023, that means what would have happened? You would have completed the year and so you would have given a depreciation. Fortunately, you are selling it on the first day of the previous year itself, which means depreciation will not come. Asset is 28,125 WDV. 28,125. 1 lakh is the balance. So add both, it will become 1,28,125. So other assets will now become 1,28,125. Add all the four assets. 9 lakhs plus 2,90,000 plus 1 lakh plus 1,28,125. 14 lakh 18 1418 125. This is your asset side. This is your asset side, but I also want my liability side. So reduce 1,40,000, reduce 37,500. 19,72500. 19,72,500. This is your net worth of the unit. That becomes your cost of acquisition. Therefore, you will find your long-term capital gains as total of liability. Total of liability is 1,77,500. Door number torti utta. Vara. 12,40,625. Therefore, your long-term capital gains will be long term or short term? Long term, short term? Long term. Why? Because unit was started in 910. Will you give indexation? No indexations for slump sales. Done? Clear? Yes. This marks the end of your chapter called as capital gains. Any doubts? No? Are you able to understand the logic behind capital gains now? Makes it a little easier for you? Yes. From exam perspective, what is the most relevant from capital gains? Please understand. It is your stamp duty value provisions. Both at the time of you will take agreement. Provided you receive token money and conditions are satisfied, you will take. It is not whichever is beneficial. It is you take agreement. If the conditions are satisfied, you take the sale, whichever is there. Okay. Done? Yes. Where was I? From capital gains perspective, what is important from exam perspective is to understand all your stamp duty provisions. Meaning, during the time of sale, what happens? During the time of acquisition, what happens? Okay, if the acquisition happens before 2001, you have a provision. What happens during a sale? That is also one provision. These are the two most important provisions from your capital gains perspective, exam point of view. Then what is the most important perspective is 54, 54 EC and 54F. 54, 54 EC and 54F. And the last item which is important from exam perspective is your slump sale. Okay, these are the items which are normally tested in your exam. Normally tested in your exam. The 112 and all will come as a part of your rates of taxes. Will come as a part of your rates of taxes. Capital gains Puerto Rico, these are the only things which are mostly tested. Balance, everything are not so much tested. So from exam perspective, this Suraj question, Yuvika question, Shiva question, all these questions are what is tested in exam. Please go home and prepare it once again. Please prepare it once again so that you have an understanding of how the provisions look like. Clear? With this, what we are done with this, the major chunk of your syllabus. The major chunk of syllabus is already done. The 5 heads of income is through. Technically speaking, out of 60 marks, 40 marks is done. Out of 60 marks, 40 marks is done. What is left off is your balance, 20 marks. So let's figure out what and all we have completed. We have completed basics, rates, residential, salary, HP, PGBP, capital gains, distribution, reorganization, IFOS, dividends. Agriculture is over, unexplained is over. Anything else? No, right? 115 BSc will automatically get over. We still have certain provisions pending. By 115 BSc will get over. Done? Yes, we are completed with 40% of the syllabus. The balance syllabus will go off in a flash. You won't even realize. That's how it will go in a flash, because nothing is there to remember itself. Nothing is there to remember. Mokhyana provisions will come. Okay. Starting with the first one, chapter called as clubbing. Page number 192. 90. Starting with a chapter called as clubbing of income. This is, I think, golden rule step number 6, I think. 6 or 5? 6. We are in golden rule number 6 right now, called as clubbing of income. Okay. What this basically is coming and saying is, boss, there are certain cases where I feel that you could avoid taxes. You could avoid taxes by diverting the income to someone else. So therefore, I am introducing a provision called as clubbing of income. I think there are some 5 provisions to remember. That's all is the answer. Nothing else about it. Okay. Clubbing of provision starts with the first thing, comes and says as, boss, if at all you are going to transfer your income to someone else. If you are going to transfer your income to someone else. Rahul, I have an FD in my hand. I keep the FD with me. But I'll say, boss, interest income alone, please pay to someone else. So let's say Suresh. Okay. So Rahul is coming and saying FD is in my hand, but the interest alone will go to Suresh. In that case, income tax comes and says, nothing doing, boss. The interest will be taxable in the hands of Rahul. I come and say, boss, going forward, FD always will be with me. But interest will always go to Suresh. In that case, it will still be taxable in the hands of Rahul, because the provision comes and says that, boss, you need to transfer your income without transferring an asset. If you are transferring your income without transferring an asset, I don't care whether the transfer is revocable or irrevocable. As long as you are going to transfer your income, it will be always taxable in the hands of transferor. Which means now to avoid taxes, what I need to do? I need to transfer my asset. Here is where income tax comes and says, if you are going to transfer your asset to someone else on a temporary basis, meaning revocable transfers, income tax comes and says, in that case also the income is taxable in your own hands. So if I give my FD to Suresh and I come and say, boss, 2 years later I'll collect it back from you. In that case, the income will be taxable in the hands of Rahul. I come and say, no, Suresh, do one thing. This FD is for you forever. This FD is with you forever. This is called as irrevocable transfer. Income tax comes and says, if you are going to irrevocably transfer your asset to someone else, then in that case, no taxability. But yes, if I go to Suresh and I come and say, do one thing, Suresh, you keep the FD with you forever. But interest alone, you give it either to me or to my wife. Give it to either me or my wife, meaning FD has gone irrevocably, but the benefit of that is coming to me or my wife. It is again taxable in my hands. So the provisions are, if you transfer your income without transferring an asset, taxable in the hands of transferor. If you transfer your asset on a revocable basis, taxable in the hands of transferor. If you transfer on a irrevocable basis, generally not taxable unless and until it is for the benefit of the transferor. Clear? 3 provisions over. Fourth provision. I am coming and saying, boss, I am going to transfer this asset irrevocably. I'm going to transfer this asset irrevocably, but this time I'm going to transfer it to my spouse, or to my son's daughter. Whom? Son's daughter. I'm not transferring to my son, I'm transferring to my son's daughter. Why? You transfer to your son, he will throw you out of the house. Okay, you transfer to your son's daughter, some possibilities there. Some possibilities there. Don't transfer to your son, because then in that case he will throw you out of the house. Bagban only will happen. For those who know Hindi movie, there is a movie called Bagban. Okay, the Amitabh Bachchan is the hero of the movie. He'll basically do what? He'll give the house in the name of kids, and the kids itself will come and say, do one thing, you leave the house and go. We want the house for ourselves. Okay, or periya movie that is. And one of the worst movies in Hindi, because the day Bagban is coming in the movie, TV, you know, your parents will be looking at you like this. And you'll be like, "Dey, panamatanda, edukada indha prachana." But that is how the problem is. Okay, so Bagban is one of the, okay, ignoring Bagban, the point is, if you're going to transfer your property to your spouse or your son's daughter, if you're going to transfer your property to your spouse or your son's wife, in that case also it will be taxable in the hands of transferor. Here I don't care whether it is inadequate, whether it is for my benefit, it is revocable, irrevocable, doesn't matter. As long as I'm transferring the asset, it is taxable in the hands of transferor. But please do understand, what I'm not covering here is your house property. What I'm not covering is, why? Because it is already deemed ownership. I am not covering my house property. I am covering my other assets. Here is where I'll take a pause and I'll try to clarify to you people. Please understand. Let's say if there is any kind of transfer happening from wife to husband. For example, wife comes and gives jewelry to husband. Will the income be taxable for husband? No. Will the income be taxable for wife? No. Why? Because it is gift. It is a gift, not regarded as transfer because of relative definition. But tomorrow what I do is I take the jewelry, I invest in my business and get profits out of it. In this case, the profits will become taxable in the hands of wife. Why? Because the asset was transferred from my wife to me, and that was used for the purpose of generating my income, so it will become taxable in the hands of wife. Clear? Yes. So clubbing works along with IFOS. Just because an income is not taxable under IFOS does not mean clubbing will not apply. Clubbing can still apply as long as it is from your spouse or your son's wife. Clear? Adan sonnama. You cannot cover son because possibilities of the son not giving it back to you is very high. Okay. When I say son, let me clarify, I am talking about major son. I'm not talking about minor son, because minor provisions are separately there. When I talk about son, I'm talking about major son, because major son now has a legal authority to do whatever he wants. So he can decide that tomorrow the house is in my name, I will never call you back. There is a risk there. The whole idea about clubbing itself is that the money should be within the house. And you should pay lower tax. If the money is going to my son, there is no taxability happening. Forget the taxability, money itself is not coming back. Okay, that is why son's wife is covered and son is not covered. Clear? Yes. So the provisions are spouse and son's wife. This is provision number 1. Provision number 2 comes and says, boss, you are transferring it to someone else. For the benefit of my spouse or for the benefit of my son's wife. Basically, I go to some other company. Let's say I create a company and I come and say, take this asset, put it in the company. Whatever is income coming from the company will be benefited for my wife or for my son's wife. In that case also, it will become taxable in my hands. Clear, not clear? Clear? Yes. So the provisions are like this: transfer of income without transfer of asset, transfer of asset on a revocable basis, transfer of asset on an irrevocable basis for my benefit or someone else's benefit indirectly to me. 4th one, transfer of asset to spouse or son's wife, transfer of asset to someone else for the benefit of spouse or son's wife. Yes, these are all the provisions. Then comes the provision where they come and say, boss, if you are going to employ your spouse, in an organization where I along with my relatives have substantial interest, substantial interest. In that case, I will come and ask the question of, do you have qualification for getting that kind of money? Do you have the qualification to get that kind of money? If you find out that the person does not have that kind of qualification, that income will also be taxable in the hands of the owner. There is no transferor in this. It will be taxable in the hands of owner. Okay. So for example, if I have a company called ABC Limited, in that ABC Limited, I am employing my wife. She is a second standard pass out, and I am telling her, you are my BCom books maintaining woman. You are going to maintain my books, for which I am going to give her a salary. Is she qualified to do the job? No. In that case, I will come and check, is my company, I am having substantial interest or not. If I find out that I have a substantial interest in that company, whatever is the salary which she gets will be taxable in my hands. Clear? When I say you along with the relatives, what do you mean by relatives? Relatives means left side of your IFOs. Where did we learn this? Left side of IFOs, where did we learn? Where did we learn? Chapter mattum sonna porom. PGBP. We learned it in PGBP, where we came and said left side of the family, if you give any payment which is unreasonable in nature, it will be disallowed. Correct? So left side of the family is covered in two places. One is here, one is your PGBP. Correct? So me along with my left side of the family should not be having substantial interest. Clear? Next provision, they are coming and saying, boss, if my spouse is giving me some money, and I am taking this money and depositing in a business, in the form of capital, not in the form of loan, but in the form of capital, then in that case, whatever is the profit which is earned from the business, that also will be shared by me and my spouse. That is what the rule is. Okay. So for example, if I have a business in which I invested 2 lakh rupees, my spouse invested 2 lakh rupees, total investment is 4 lakh rupees. Profit in the current year business is 1 lakh. 50,000 will be taxable in my hands, 50,000 will be taxable in spouse hand. Clear, not clear? Here, how do I split? I split using the 1st April capital contribution. Abdina enna artham? Rahul 2 lakhs I invested today. My wife also invested 2 lakh rupees. Nadu over the year, wife gave additional 1 lakh rupees. Will you consider that? No. You will not consider that for the current year. Next year it will be forming part of opening. Next year you consider it. Clear? Last provision, they are coming and saying, boss, if you have a minor at your home, whatever is the income which is earned by the minor will be taxable in the hands of the parent. Any parent whose income is higher. Any kind of minor you have at your home, whatever income the minor earns will be taxable in the hands of parent whose income is higher. Exception is that minor should not be handicapped. If the minor is handicapped, minor income, minor taxable. If the minor is a handicapped person, whatever income is earned by the minor will be taxable in the hands of minor. Second one, they are coming and saying minor should not have earned this income through a skill. If the minor has earned the income through a skill, it will be taxable in the hands of minor. Clear? Yeah. Last rule, the rule comes and says, boss, what is going to be taxable is the first level of income. Accretions are not taxable. Abdina enna artham, Rahul? I have an FD. 1 lakh rupees worth of FD. 10% on that is my interest. Interest amount is 10,000. What I did is, this FD was given by my wife. So this 10,000 is taxable in the hands of wife. Next year, what I did is, I took this full 1,10,000 and deposited. 1 lakh also will earn 10%. 10,000 will also earn 10%. In this case, 1 lakh oda interest alone will be taxable in the hands of wife. 10,000 oda income will be taxable in my hands. Second level income not taxable. When I say not taxable, not club. But here, if it is a minor, then it is club. Rule of minor is very simple. Take whatever income the minor has, everything is taxable in my hands. Except for the two incomes which are handicapped and skill. That's all. Okay. So even if there is accretion, that also will be taxable in the hands of the parent as long as it is not from a skill or a handicap. As long as it is not from a skill and a handicap. Clear? Clear? Last leg of the provision comes and says, if at all a minor's income is taxable in the hands of the parent, you are eligible for an exemption of 1,500 rupees. 1,000 per month per year. Per year. You are eligible for an exemption of 1,500 per year. மொத்த வருஷத்துக்கு 1,500 தான் exemption. மொத்த வருஷத்துக்கு 1,500 is the only exception. It is 1,500 per child. 1,500 per child per year. 1,500 per child per year. But yes, if you opt for 115 BSc, no exemption for you. If you opt for 115 BSc, 1,500 will become fully. Enama? Any child is okay, ma. Any child is okay. As long as you have a child, 1,500 per month, per year exemption allowed to you per child. But if you're opting for 115 BSc, no exemption for you. Fully will become taxable. Clear? Yes. These are what the provisions are for clubbing. Any doubts? Any doubts? No doubts? Can we repeat it again? Starting from the top. First is your transfer of income. First is your transfer of income. Second one is transfer of asset on a revocable basis. Third one is transfer of asset on an irrevocable basis. Benefit is coming to me. Benefit is coming to me. Fourth one is transfer of asset to spouse or son's wife. Fifth one is transfer of asset to someone else for spouse or son's wife. Next one is, if you have a business where you have a substantial interest, if any kind of income is earned by your spouse from that business, it will be taxable in the hands of transferor unless it is proved that she has a qualification. Then if the spouse is going to give you some money for investment in your business, to the extent of the capital contribution on the 1st April of the year, that profit will be proportionated between your spouse and self. Then we came and said, if you have a minor, minor's income will be taxable in the hands of parents whose income is higher, unless and until it is proved that the minor is a handicap or the minor is earning it through skill. What is taxable is first level of income. Accretion is not taxable except for minors. Except for minors. If a minor's income is being clubbed in your hands, you are allowed an exemption of 1,500 per year per child, not eligible under 115 BSc. Clear? Understand the last rule. Taxable in my hands. Definitely taxable in my hands because the investment is not happening through a skill. Okay. Okay. Yes. Last rule of this whole chapter. Please understand what is being clubbed in my hands is income. What is being clubbed in my hands is income. What is not being clubbed is receipt. அப்படினா என்ன அர்த்தம்? You will compute the income in the hands of the other person, then club it in my hands. Then club it in my hands. A simple example, if at all I am going to engage my wife in a company, I am going to engage my wife in a company and going to pay her 50,000 per month as salary. 50,000 per month as salary. She has no qualifications for it. She has no qualifications for it. The income to be clubbed in my hands is, compute and tell me. I am going to give her a salary of 50,000 per month. What is the number to be taxable, people? Amount ma. What is the amount to be taxed? 50,000 per month sonna. 5 lakh? How did you get it? That is what the rule is. Understand, 50,000 into 12 will give you 6 lakh rupees, but 6 lakh rupees is the receipt. 6 lakh rupees is the receipt. What is going to be taxed in my hands is the income. So therefore, first allow the standard deduction in her hands and then bring the money in my hands. Then bring the money in my hands. Clear? Not clear? Clear? Yes? Done with the chapter? Shall we do the sums? Shall we? Yeah. Question number 1. Mr. Vaibhav started a proprietary business on 1st April 2021 with a capital of 5 lakh rupees. With a capital of 5 lakh rupees. He incurred a loss of 2 lakh rupees during the previous year, 21-22, which means technically now his capital is how much? 3 lakhs. It's a proprietary business, ma. It's a proprietary business. Capital is 5 lakhs, loss is 2 lakhs. Therefore, now now capital is 3 lakhs. To overcome the financial position, his wife Vaishali, a software engineer, gave a gift of 5 lakh rupees on 1st April 2022. This amount is taxable in the hands of Vaibhav. True or false? Why? Amount of 5 lakh rupees given by Vaishali to Vaibhav taxable as income in the hands of Vaibhav. True or false? Why? It's a gift from a relative. It's a cash given by a relative, will not be taxable. Next. This gift of 5 lakh rupees was immediately invested by Vaibhav in the business. When did he invest? 1-4, on the first day itself. On the first day itself. So if I am looking on the first day, Vaibhav's income is showing 3 lakhs. Vaishali's income is showing how much, ma? 5 lakhs. Correct? So total capital in the business is 8 lakhs. He earned a profit of 4 lakhs during the previous year, 22-23. Because of this capital contribution, now his profit is 4 lakh rupees. You are required to compute the amount to be clubbed in the hands of Mrs. Vaishali. What will you do? Will 4 lakhs be fully taxable for Vaibhav? No. What will you do? 4 lakhs into 5 lakhs by 8 lakhs will give you 2 lakh 50. How much will be taxable for Vaishali? How much will be taxable for Vaishali? 2 lakh 50. How much will be taxable for Vaibhav? 1 lakh 50. Clear? If Mrs. Vaishali had given this amount as loan, what would be the amount to be clubbed? 0. It only is taxable when it is capital, not a loan. Not a loan. Clear? Yes. Can we go to the next one? Yes. Mr. A has gifted a house property valued at 50 lakhs to his wife Mrs. B, who in turn has gifted the same to Mrs. C, their daughter-in-law. A gave it to B. B gave it to who's C? Daughter-in-law, son's wife. Yes. The house was let out at the rate of 25,000 per month throughout the year. You are required to compute the total income of Mr. A and Mrs. C. What will happen? First of all, whose hand is this income taxable under? A va, C va? Why? Howda? Adha enak theriyum. How? Transfer to son's wife is deemed ownership under. HP says transfer to spouse or transfer to minor child. Taxable in the hands of A only. A only. Why? Understand, people. Transfer from B to C is transfer to son's wife. Transfer to son's wife. This will be clubbing income. This will be clubbing income. Then because A transferred to B, this is deemed ownership, so income will again become taxable in the hands of A because of deemed ownership. Because of deemed ownership. So from C to B it will be clubbing, from B to A it will become deemed ownership. So income is taxable in the hands of A. What is the amount? Huh? How? 25,000 into 12. Very good. 25,000 into 12 will become your rent, but this is income from house property. You have to allow 30% standard deduction. Number is 10,000. What would be your answer if the property was gifted to the son? What would be your answer if the property was gifted to the son and not the daughter-in-law? Clubbing will not apply. Clubbing will not apply, meaning the income will be taxable in the hands of son itself. If it was given to the husband, it will be directly taxable in the hands of husband itself, will not be clubbed in the hands of A or B. Done? Next one. You are required to compute the gross total income of Mr. and Mrs. A, husband and wife, Mr. and Mrs. A, for the following information given to you. The salary is given for Mrs. A as 2,30,000. It is already computed. Will you allow standard deduction? No. So let's prepare. If this works, please work. Yeah. You have A, you have Mrs. A. First one, they are coming and saying salary for Mrs. A, directly taxable. Amount is income from profession of Mr. A, taxable for A. This is PGBP, correct? Next, income of minor son B from company deposit 15,000 rupees. It has to be clubbed in the hands of. Why? You don't know right now. You are still yet to look at the balance incomes. So let's hold this information. Next one. Income of minor daughter C from special talent. Taxable for. They are asking for A and Mrs. A. Relevant information, not relevant. Ignore the information. Interest from bank received by C on deposit made out of her special talent. Taxable for parent. Taxable for parent. Hold. Gift received by C on 30/9/2022 from friend of Mrs. A. Taxable in the hands of. Taxable in the hands of no one. What is taxable is gift, income, not receipt. How much gift have you received? How much is the maximum limit? 50,000 is your limit. You have received only for 2,500. Therefore, gift amount taxable is 0. Gift amount taxable is 0. Yes, sir. Highlight the last one and keep. It's important. Done. With this, the information which is left off is only these two. And we have no other incomes. So now we can look at whichever parent income is higher. Which is higher? A is higher. So therefore 15,000 will become taxable in the hands of A. 3,000 will be taxable in the hands of A. Can we total? No. Allow for exemption of 3,000 rupees. What is 3,000? Two child, B and C, two different childs, therefore 1,500 each, 3,000 will be allowed as an exemption. Number becomes 4,05,000 for A, 2,30,000 for Mrs. A. Done. Shall we go forward? Yes. Examine the tax treatment in the following cases. Minor son's winnings from lottery is given as 1,95,000 in the hands of parent whose income is higher. Gross is given to you. How much is taxable? Full 1,95,000 is taxable minus 1,500. Minus 1,500. You can make a choice, people. ICAI gives two interpretations. One interpretation, they come and say full 1,95,000 is taxable. Second interpretation, they come and say 1,500 can be claimed as an exemption. You have both the options. You can tax whichever you want. Yes. Next one. Mr. A has a fixed deposit of 5 lakh rupees in Bank of India. He instructed the bank to credit the interest at the rate of 9% from 1/4/2022 to 31st March 2023 to the savings account of Mr. B, son of his brother, to help him in his education. What has happened? You have an FD. FD or interest is being transferred to brother's son. Taxable in the hands of. Why? Transfer of income without transfer of asset. Amount taxable is 5 lakhs into 9%, 45,000. Next, Mr. A holds 75% of profit share in a partnership firm. Mrs. A receives a commission of 25,000 from the firm for promoting the sales of the firm. Mrs. A possesses no technical qualification. Taxable in the hands of A. How much is the amount? 2 lakh 15. 25,000 directly. Yes. Next one. Mr. A gifted 2 lakhs to his minor son who invested the same in a business and he derived an income of 20,000 from the investment. Taxable in the hands of Mr. A. Amount is 18,500. Kamal gifted 10 lakhs to his wife Sulochana on her birthday on 1st January 2022. Who's Kamal? Who's Sulochana? Husband, wife. Husband gave 10 lakh rupees to wife. Obviously. That is why we're giving exemption, no? Yes. Kamal is gifting 10 lakh rupees to his wife Sulochana on her birthday on 1st January. Sulochana lent 5 lakh out of the gifted amount to Krishna on 1st April for 6 months, in which she received an interest of 50,000 rupees, taxable in the hands of Kamal. First level income, taxable in the hands of Kamal. The said sum of 50,000 was invested in the shares of a listed company on 15th October 2022, which was sold for 75,000 on 30th December 2022. Securities transaction tax is paid on such sale. This is a head of income, capital gains, nature of income, short term, amount of capital gains 25,000, taxable in the hands of Sulochana. For Kamal, I am going to tax the 50,000 as IFO as income. For Sulochana, I am going to tax 25,000 as short term capital gains because this is second level income. The balance amount of 5 lakh rupees, he gave 10 lakh rupees, 5 lakhs in the kutto he did, balance 5 lakh rupees he invested in the business. She invested in the business and she suffered 15,000 in the business. Will be taxable in the hands of Kamal. When you say clubbing of income, clubbing of losses are also covered. Therefore, this PGVP loss will be taxable in the hands of Kamal. Kamal or net income is Sulochana or STCG is 85. Clear? Loan is received by Mrs. Darya from Ramu and J Private Limited. Darya is holding 35% of the shares of the company. Company has incurred loss since inception, 2,50,000. Where are we? Take a second. Understand the transaction. There is a company which is giving a loan to you. You are holding 35% of shares in the company. Very good. You are in deemed dividend right now. A private company giving loans to your shareholders holding substantial interest will be taxable as deemed dividend. Amount taxable is amount taxable is 0. Why? Very good. The company has no accumulated profits. Question பார்த்துட்டு எந்த ஹெட்ல போறது, that is something which is a challenge to always understand. Please be careful about what transaction is happening. Okay, open your mind and understand where we are. Okay, you are required to determine the gross total income of Sri Ramkumar and Srimati Ramkumar for the assessment year 23-24. Salary received by Sri Ramkumar from a company is 1,80,000 per annum, and Srimati Ramkumar also doing job in the company and getting a salary of 2,40,000 per annum. Taxable in the hands of Respective people, nothing is given. Respective people, nothing is given. Amounts are. Why did I give standard deduction? The word important is received. What do you mean by received? Kaila vandirukku. What you have received in hand is received, which means you have received in hand 2,40,000. Income tax பொறுத்த வரைக்கும் you are going to tax income, which means after allowing standard deduction. Be careful. Okay, next one. Sri Ram Kumar transferred a flat to his wife. Sri Ram Kumar transferred a flat to his wife Srimati Ram Kumar on 1st September 2022 for adequate consideration. The rent received from this let out flat is given as 9,000 per month. Taxable in the hands of. Why? Very good. Amount to be taxable. Huh? 75,600. How did you get it? A number. 9,000 into 12 will give you 1,08,000. Hey, 6 months ra. 6 months ma. Huh? 54,000. 54,000 minus standard deduction number is 37. Taxable in the hands of both. நீங்க தான் 6 months சொன்னீங்க, நான் சொல்ல. 37,800 7 months or 6 months? Hey, September, October, November, December, January, February, March, 7 months. 9,000 into 7 is 63 minus 30%. Number is. See, I can teach you income tax. I cannot teach you calculators. 40, 400. What about Shri? Amama, Srimati 4,400. What about Sri Ram Kumar? 9,000 into April, May, June, July, August, 5 months. 9,000 into 5 will give you 45,000. 45 minus 30% is 31,500. Yes, somewhere noted down. Sri Ram Kumar also has income on this. Be careful. Shall we go forward? Third one. Sri Ram Kumar and Srimati Ram Kumar both are partners in a firm. Both are partners in a firm. Sri Ram Kumar is receiving 36,000 and Srimati Ram Kumar is receiving 64,000 from the firm as interest. And they are also receiving share of profit of 12,000 and 26,000. What to do? What is the numbers? How much for Sri Ram Kumar? 36,000, 64,000. Then 0 and 0. Share of profits are exempt from tax. Shall we go forward? Srimati Ram Kumar transferred 10% debentures worth 3 lakhs to Sri Ram Kumar. This time wife is giving to husband. Wife is giving to husband. The whole of the amount of 3,30,000 invested by Sri Ram Kumar in a similar investment and earned income of 39,000. What has happened? What has happened? Please understand, people, what is happening? There is a debenture worth 3 lakhs. And here somewhere they are hidely coming and saying 3,30,000. Meaning what happened? Initially 30,000 was received by Shri. Then he took both the amounts and then he gave it. So first of all, there are two incomes in this. Income number one is 30,000. Will be taxable in the hands of Srimati. Yes or no? Yes or no? Then there is an income of 39,000. Then there is an income of 39,000. In this 39,000, 3 lakhs pertain to Srimati. Balance 30,000 pertains to Shri. So what will you do? 39,000 for full 3 lakh 30. 39,000 for full 3 lakh 30. How much for 3 lakhs? 35 454. So how much for husband? 46 ma. 3546. Clear? Yes, be careful on the numbers. Last one. Mother of Sri Ram Kumar transferred a property to Master Rohit in the year 2021. Mother of Ram Kumar transferred a property to the Master Rohit, son of Sri Ram Kumar, in the year 2021. Master Rohit received 15,000 as income from the property on 20 February 2023. Whose income is higher? Check. Add the incomes. Add the incomes. Tell me the numbers. Which one? 3. 393. Okay. 4. ஏதோ ஒன்னுடா, ஏதோ ஒன்று நம்பர் சொல்லு. 455. 3934 55. 3,93,400 and 363 5 ஏதோ ஒண்ணுமா, அதான் நம்ம லெஃப்ட் சைட் 20104546 ரெண்டு ஒன்று தான்டா. Round off to the nearest 10 anyway, it doesn't matter. Okay, yes, with this you now understand whose income is higher. Srimati's income is higher, so the income of the child should be taxable in the hands of Srimati. Amount to be taxed. You need to make a choice. You need to make a choice. Look at the question. Question comes and says they transferred a property. I don't know whether it is a HP or an other property. If it is an HP property, you will get standard deduction of 30% and then you will allow 1,500. If you assume that it is not an HP, you will directly tax it. I am assuming not HP, so therefore it will be taxable under IFRS. Taxable under IFRS. 15,000 is your income. Allow for standard deduction of 1,500. So 13,500. Total the incomes 201045. Does the question say compute the total income? Oh, it says determine gross total income, which means you cannot round off. Number? 377,055. No rounding offs happening because the question says determine the gross total income. Clear? Yes. Yes. Careful on the last adjustments. I think this one is important. This one is important. This one is also important. If my memory serves right, this was November 2019 question. Shall we? Everything is from my study material only. Na question man kuthirkala unakku. Everything is past exam questions. I don't have the practice of preparing my own questions because then tomorrow you'll start crying. என்னோட லெவலுக்கு questions எல்லாம் ஃபெயில் ஆயிடுவீங்க. அதான் பிரச்சனை. தெரியும்ல அந்த rates of taxes. Last question. Last question. This is something similar to the salaries question which we did, the question where I told you to leave it and go. Okay, something like that kind of question. One of the worst questions ever tested in exam. My assumption, I think this is Jan 21 question. My assumption, this is a Jan 21 question. One of the worst questions in exam. Let's try it. Okay, questions like this, you see the content itself, no size paatha unakku theriyum. Clubbing of income ivlo periya size varudana kandipa something is wrong. Okay, so let's understand the question. Let's see how much you can answer. Okay, during the previous year 22-23, following transactions took place in the respect of Mr. Raghav. Took place in the hands of Mr. Raghav, who is 56 years old, meaning he is not a senior citizen. Mr. Raghav owns 2 house properties in Mumbai, the details of which are given to you as under. First house property, rent received is not applicable. Appadina, self-occupied property. Municipal taxes paid is 7,500. Allowed, not allowed? Hey, allowed, not allowed? Not allowed. Interest on loan taken for the purchase of property up to a maximum of principal repayment of loan taken from HDFC Bank 80C. 80C. Come to the right side. You have rent received of 60,000 per month into 12 minus 30%. Number is 5,04,000. 5,04,000 is your income. On that, they are telling the interest on loan taken for the purchase of property is 5 lakh rupees. Reduce the whole thing. Number will become 4,000. Yes or no? Why, ma? It's a let out property. Interest on loan fully allowed as deduction. So therefore, the income is 4,000. You have a loss of 2 lakh rupees. You have a profit of 4,000 rupees. Income from house property is 1,96,000 of loss. Hold this up. You will need it for the balance exam. Balance income. You'll hold it for the balance income. What to do for this 3 lakhs? Ignore. ATC, you can maximum claim 1,50,000 fully utilized from left side. Fully utilized from left side. Can we go next? Okay. Mr. Raghav had a house in Delhi. During the financial year 13-14, he transferred the house to Mrs. Vamika, daughter of his sister. Sister or a daughter, he gave a house property in 2013-14 without any consideration. Okay, no problem. Because it is given to daughter's child. Daughter's child not covered in clubbing, so therefore no problem as of now. House would go back to Raghav after the lifetime of Mrs. Vamika. Abdina, irrevocable transfer, meaning it is not taxable in the hands of Mr. Raghav. It's a transfer on irrevocable nature, therefore it is not taxable in the hands of Raghav. The transfer was made with the condition that 10% of the rental income from such house shall be paid to Mrs. Raghav. It is done on an irrevocable basis, but benefit is coming indirectly to Raghav in the form of gift to wife. The rent received by Mrs. Vamika during the year is 5,50,000. Amount to be taxed in the hands of Mr. Raghav is how much? Amount of income to be taxed in the hands of Mr. Raghav is how much? ₹5 lakh? Why? Only 10% benefit is going, no? One assumption from ICI made in this question. They are coming and saying, boss, even if 10% is going for the benefit, amount taxable is full. Even if 1% benefit is going to your wife, amount taxable in your hands is full taxable. I don't know how the logic works. But ICI thinks they know better. Okay, so as per ICI, full amount is taxable. Amount taxable in the hands of Raghav is how much? 3 lakh. How did you get it? Very good. So, as per income tax, I will go and fight that if only 10% is coming to me, why should I pay tax on balance? %90% she is going to enjoy, but tax alone I will pay. Now, what is the use? Okay, 3,85,000 is your 3,85,000. 3,85,000 is your income from house property. 1,96,000 is your loss from house property. Total net income from house property is 1,89,000. Yes, this is your income from house property as of now. As of now. Clear till here? Yes, next question. Mr. Raghav receives the following income from M Private Limited during the previous year, 22-23. He had taken some debentures for that from that company and therefore received an interest of 7,50,000. Taxable in the hands of Raghav. Taxable in the hands of Raghav. Under the head IFOS. IFOS income is how much? 7,50,000. Done? Yes. Salary of 3,75,000. He does not possess the adequate professional qualification which is required to get the salary. It's required to get the salary. But for you to satisfy the condition, your wife should hold more than 20%. Correct or not? Look at the question. It says the shareholding in MM Private Limited is as follows. Raghav holds no shares. Raghav holds no shares. Mrs. Raghav holds 2% in equity, 25% in preference. Brother of Mrs. Raghav holds 98% in equity and 75% in preference. Did you satisfy the condition? Not satisfy the condition. You satisfied the condition because it is not you, it is you along with your relatives. You along with your relatives. You will look at preference or equity. Equity. I am looking for substantial interest in voting power. Voting power Puerto Rico. Wife along with the brother is holding 100% interest in that company. Therefore, the salary which is received by Raghav will be taxable in the hands of wife. Will be taxable in the hands of wife. Will not be taxable in the hands of Raghav. So, therefore, the only income taxable for Raghav is 7,50,000. Clear? Yes. Yes. Next one. Mr. and Mrs. Raghav form a partnership with equal share in profits. Mr. Raghav transferred a fixed deposit of 1 crore to such firm. He had 1 crore worth of FD. He transferred it to the firm. The firm had no other income other than the interest which is earned on this FD. The interest on this FD is 9 lakh rupees which is received from such FD. The firm distributed the entire surplus to Mr. and Mrs. Raghav at the end of the previous year. What to do with this? You don't know the question? You don't know the question? What to do with this adjustment? Nothing. Share of profits in the hands of partners are exempt from taxes. Interest earned by the firm will be distributed to the partners in the form of share of profit. Therefore, it becomes exempt from tax. Mistake number 1. Next. Mr. Raghav holds preference shares in K Private Limited. He instructed the company to pay dividends to Mrs. Geetanshi, daughter of his servant. Daughter of his servant. Servant oda daughter kaga dividend kuthirukam. The transfer is irrevocable for the lifetime of Geetanshi. Transfer is irrevocable for the lifetime of Geetanshi. Dividend earned by Geetanshi is 13 lakh rupees, taxable in the hands of by. Very good. Irrevocable is income irrevocable, not the asset. Asset is still with Raghav. Asset is still with Raghav. This is in transfer of income without the transfer of an asset will become taxable in the hands of. Most of the people made mistakes here. Shall we? Other income of Raghav is given to you. Interest on savings bank account is 2 lakh rupees. What to do? What to do? Tax it fully under IFOS. Allow something called as 80 TTA of cash gift of 75,000 received from daughter of his sister. Cash gift of 75,000 received from daughter of his sister on his birthday. Taxable or not taxable? Taxable. Sister is your relative, daughter sister is no relative for you. Therefore, it becomes taxable. What are the amounts taxable? IFHP of 1,89,000, your IFOS of 7,50,000, 13 lakh, 2,75,000. You will claim something called as 80 TTA of 10,000 and claim something called as 80 C of 1,50,000. It was some 6-mark question, totally not worth it. Totally not worth it. ஏகப்பட்ட இன்வெஸ்ட்மெண்ட்ஸ் இருக்கு, அட்ஜஸ்ட்மெண்ட்ஸ் இருக்கு இதில். $189 plus 7,50,000 plus 13 lakhs plus 2 lakhs plus 75,000 plus 10,000 plus 1,50,000. Sorry, minus 10,000 minus 1,50,000. 23 lakhs 54,000. 23 lakhs 54,000 is what your income will look like. Clear? Careful on these questions, people. Shall we go ahead? Shall we go ahead? Yes. Done? Yeah. Going to the next chapter called as set off and carry forward of losses. Entering the next chapter called as set off and carry forward of losses. In my book, you will find this in 3 sides, I think. Yeah, it are the 3 sides. It are the 3 sides. Ignoring all the 3 sides, what is to be read from exam perspective is just the table. Okay. Ignoring the 3 sides, one table will do everything for you. The whole chapter will be completed in just one table for you. No remembering anything else. Okay. Just one table for you to do for your exam purposes. Shall we? Yes. Before I enter the table itself, let me clarify one golden rule to you. It is a loss of an exempt income that is ignored. A loss of an exempt income is ignored. Okay. If you have a loss, let's say for example, you have loss from winnings, what will you do? Ignore. Loss from unexplained, what will you do? Ignore. If you have any kind of loss from agriculture income, ignore. If you have any kind of loss from share of profits, ignore. Okay. The rule is very simple. If the exempt income is ignored, the loss from the exempt income is also clear. Yes, keeping that golden rule in mind. Next golden rule, I came and clarified to you that boss, whenever it comes to unexplained income and your winnings, whenever it comes to your unexplained income and winnings, you cannot set off any kind of losses against them. No losses set off permitted against them. They will directly be taxed. They will directly be taxed. Keeping these 2 rules in mind, let's understand the table. Let's understand the table. The rule is very simple when it comes to set off and carry forward. Do not start from income perspective. Always start from loss perspective. Never start from income perspective. Start from loss perspective. The problem happens is when you start from income perspective, you will make judgments. Okay, but when you start from the loss perspective, answer will always come out right. So in an exam, if you see some losses, always look at the loss first and then understand what to do with the loss. Never start from the income. Never start from the income. Okay, keeping that in mind, let's start from the loss perspective. You have 5 heads of income. You have 5 heads of income. Let's understand those 5 heads of income. First head of income is salaries. Do you have any loss from salaries? No. So therefore, the provisions will not apply. Provisions will not apply. Second loss is house property losses. House property losses, Puerto Rico, income tax comes and says, boss, you have 3 kinds of modes. One is called as intra-head, inter-head, carry forward. Intra-head, inter-head and carry forward. Intra-head now, within the same head. Inter-head now, between other heads. Carry forward is future years. Carry forward is future years. Provisions come and say if you have a loss from house property, intra-head you can set off without any restrictions. Intra-head you can set off without any restrictions. Inter-head if you want to set off, you can set off only up to a maximum of 2 lakh rupees. You can set off only to a maximum of 2 lakh rupees. If you are not able to set off, please carry forward for a period of 8 years. In which case you can set off only against HP income. In which case you can only set off against HP income. But if you are carrying forward for a period of 8 years, you need not file your return on time. It's okay. It's okay even if you don't file your return on time. provisions are not mandatory. Provisions are not mandatory. Clear? Clear? Here is where 115 BSc comes into picture and clarifies, boss, SOP you cannot have a loss itself. SOP you cannot have a loss itself because interest unknown has been taken away. When it comes to let out property, inter-head adjustments not allowed. When it comes to let out property, inter-head adjustments not allowed. Appadina enna artham Rahul? 115 BSc பொறுத்த வரைக்கும், if you are opting for 115 BSc, intra-head adjustment allowed. If you are not able to set off, directly carry forward. You cannot set off against any other head of income. Meaning this part not applicable under 115 BSc. Clear? Yes, this is what the provisions say when it comes to HP. Coming to the next head of income called as PGBP. Provisions are basically coming and saying, boss, if you have a PGBP, you have to split into 5. First is speculative loss. If you have a speculative loss, you will set off only against speculative income. If you are not able to set off, you will carry forward for a period of 4 years. Return filing on time, mandatory. It is not speculative, Rahul. It is scientific research loss. Provisions will be same as UD. What does the provisions for UD? You can set off against PGBP income, no restrictions. You can set off against any other income except for salaries. If you are carrying forward, carry forward also you can set off against any head other than salaries. Infinite carry forward, return filing on time, not mandatory. Scientific research done, unabsorbed done, speculative done. Fourth item is called as specified business loss, 35 AD. They're coming and saying, if you have a specified business loss, you can set off only against specified business income. If you are not able to set off against specified business income, you can carry forward for a period of infinite years. But for you to carry forward for infinite years, return filing on time is mandatory. With this done, balance loss is only a normal business loss. They come and say you can set off against your business income intra-head, no restrictions. If you are setting off against inter-head, you can set off against any head of income other than salaries. If that also is not allowed, you can carry forward and set off only against business income. Return filing on time required. Years of carry forward is 8 years. Clear? Coming to capital gains, here is where you have to be a little careful. They're coming and saying split your capital gains into long term and short term. Take the highest of the rates. For long term, the highest rate is 20. For short term, the highest rate is 30. Question to you: if you have a long term loss, will I allow you to set off 20% of loss to 30% of income? No. So therefore, they came and said any kind of long term capital loss can only be set off against long term capital gains. If you are not able to set off against long term capital gains, you will carry forward for a period of 8 years. Return filing on time, mandatory. If you have a short term capital loss, now can you set off a 30% loss against a 20% income? Yes, you can set off a 30% loss against a 20% income. So they came and said, boss, if you have a short term capital loss, you can set off against any capital gains, whether it is long term or short term. If you are not able to set off, you will carry forward. In the year of carry forward, you will set off against any capital gains for a period of 8 years. Return filing on time, mandatory. When it comes to IFOS, like you have only one kind of loss called as owning and maintaining horse races. It is not winnings from horse races, it is owning and maintaining horse races. If you have any kind of loss from owning and maintaining horse races, you can set off only against income from owning and maintaining horse races. If you're not able to set off, you can carry forward for a period of 4 years. Return filing on time, mandatory. Either tavara, if you have any other income from other sources loss, you can set off in the current year. If you're not able to set off, you can ignore it off. You cannot carry forward. Current year losses can only be set off against current year incomes. If you have no current year incomes, you will ignore and go forward. Clear? This is what you need to remember from losses perspective. Any doubts? No? Question to you. You have a PGBP loss. Can you set off against LTCG income? You have a PGBP loss. Can you set off against LTCG income? Yes or no? Yes, you can. That's what I told you. Never look from income perspective, look from loss perspective. PGBP loss can be set off against any head of income other than salary. So can you set off? Yes. PGBP loss, can you set off against winnings? No, you cannot set off against winnings. LTCG loss, can you set off against short-term capital gains? No. LTCG loss, can you set off against PGBP income? No. Allowed, not allowed? Not allowed. HP loss, can you set off against LTCG income? Yes. HP loss, can you set off against short-term capital gains? HP loss, can you set off against short-term capital gains? You can. Look from loss perspective. HP loss can be set off against any head of income. Okay, that's what I'm telling. Always look from loss perspective. Never look from income perspective. That is what the rule is. That is what the rule is. And from your exam perspective, one rule which I generally follow: if you have a HP loss, always set off against salary first. General rule from my side, not in the books. Not in the books. My rule is that always set off against salary first. The rule is very simple, boss. If you have a PGBP loss, you cannot set off against salaries. If you have a capital gains also, you cannot set off against salaries. If you have a IFOS loss, ICI will never give you an IFOS loss, which means the only loss ICI will give you is HP loss, which means salary, the only way you can set off is against HP. Therefore, always set off against salary first, balance you set off against other hits. Balance you set off against other hits. Clear, not clear? Clear? Chapter over? Chapter over. How many questions do I have? 4 or 5? 5. You are required to compute the gross total income of Mr. F for the following information given to you. Always start from losses. Always start from losses. Let's identify your losses. First one says income from house property computed. Profit or loss? Profit, ignoring. Income from business before providing depreciation, 1,35,000. Profit, ignore. Short-term capital gains on sale of shares, 56,000. Profit. Next, long-term capital loss from the sale of property brought forward from AY 22-23. This is a brought forward loss. Hold it. Hold it. Always set off current year losses, then only bring the balance. Then only bring the balance. Income from T business, 1,20,000. What is the problem with this? You have to split into 40, 60. 40 is PGBP, therefore 48,000 is PGBP. Balance income exempt from tax. Correct? Number is 72,000. 48,000 is subject to PGBP, 78,000 is subject to partial integration. But in this question, they are asking only for gross total income, therefore you are safe. They are not asking for tax, therefore no problem, you can directly exempt it off. Okay, next one. Dividends from Indian companies carrying on agriculture operations. Taxable. That business alone is exempt, you getting dividends is not exempt. Next, current year depreciation, 26,000. What will you do? You will reduce it from your income from business. Yes, first current year items should be taken care of. So current year depreciation will be reduced from your income from business. Next, brought forward business loss. Loss incurred 6 years ago. Do you still have time? You have 2 more years. This is last year's losses, so hold. Hold. Next, loss from specified business covered under 35 AD. Only under specified income. Do we have any specified income? Check. Where? No. So therefore, what will you do? For a period of return filing. You need to write all this. You need to write all this in your exam. You need to say specified business loss, since it is not being set off in the current year, will be carried forward for infinite number of years, provided Mr. F files his return within the due date. Mark. Okay. Next, loss from speculative business, 25,000. What will I do? Next line itself, I have an income from speculative business set off to the extent of 5,000 rupees. 20,000 will be carry forward. Yes or no? Yes or no? Next, loss from gambling. Loss from gambling. Ignore. Loss from horse races. Ignore. Income from owning and maintaining horse races. IFOS income. Where do you have loss? Nothing is there. Income it is. IFOS. Life insurance premium paid. Huh? Life insurance premium paid. 80C. Hold it. Hold it. Now let's come back to our losses. Start from the top. You have long-term capital loss from sale of property. Do you have any long-term capital gains? Hello. What will you do? Carry forward. Next. Current year depreciation already taken care of. Brought forward business loss incurred 6 years ago. This is carry forward business loss, can only be set off against business income. You have a business loss. What is your business income in the current year? 1,35,000 minus 26 is 1,11,000. 1,11,000. 1,11,000 minus 45,000 will give you 64,000. Correct? Yes, sir. So your PGBP income right now is, your HP income is 1,25,000. Your PGBP income becomes 64. 64. Short-term capital gains is fully taxable. Income from T business 48,000 taxable. Dividends is 80,000 taxable. Then brought forward business loss set off done. Loss from speculative done. Loss from speculative A set off to the extent of 5,000 and balance carried forward. Income from owning and maintaining is 23,600. That's all. That's all. This will arrive at your GTI. Number is 3,96,600. Allow 80. C number is 45,000. 3,51,600. Done. What is your gross total? Waste of time. Waste of time. Waste of time. Rule number 1. Identify the question. Identify the question. They are asking only for gross total income. LIC ignored. LIC ignored. Okay. So what is your gross total income? It is 3,96,600. What is the amounts to be carried forward? Long-term capital loss of 90,000. Specified business loss of 20,000 and speculative loss of 20,000. Done? Yes. Next one. Mr. Suhan submits the following information to you. Income from salary is given as 3 lakhs. Loss from house property is given as 4 lakhs. What will you do? Set off to the extent of 2 lakh rupees. Income from salary is now 1 lakh. House property loss carry forward is, carry forward year is 8 years. Return filing on time, not mandatory. Income from sugar business, split and all you don't know, fully taxable. Short term capital loss 60,000 can be set off against, set off to the extent of 40,000. Balance 20,000 carry forward. This is anyway becomes 0 now. Okay. Dividends 5,000. Taxable, not taxable? Taxable. Income from lottery winnings 50,000. Taxable. Winnings from card games 6,000. Taxable. Agriculture income. Agriculture income. Exempt from tax. Exempt from tax. Short-term capital loss under 111A. Here is where the problem, what will happen, you have a loss again, this loss you cannot do anything, you will carry forward because long-term capital gains fully utilized, this will also get carried forward, bank interest on fixed deposit 5,000 rupees, bank interest is 5,000 rupees. This is what your income is as per the table. Let's look at the additional information. Loss from owning and maintaining horse races pertaining to AY 2021. Do you have any winnings? From horse races? Sorry, any kind of income from owning and maintaining? What will you do? Can you carry forward? 4 years. 21-22, 22-23. You have 2 more years. Brought forward business loss from textile business 60,000 pertaining to 15-16. Check 16, 17, 18, 19, 20, 21, 22, 23. You are in 7th year of loss. You are in 8th year of loss. You are in 23-24. I am looking at AY or PY. I am looking at AY. So AY 16, 17, 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23, 23, 24. You are in last year. This is the last year. This is the last year. Look at your question. Tell me if you have any business from business income. This is a business income, no? This is STCL. This is LTCL. What is 6,000? Winnings. What is 5,000? Bank interest. Hey, where is this 5,000? Oh, STCL illa, sorry. This is dividends. What is the balance amount? Bank interest. This is interest, IFOS. Yes, this is salaries. Look at a loss. You have a business loss. You can set off only against business income. What is the loss you have? 60,000. How much will you set off? 50,000. This becomes gone. Can you carry forward? No carry forwards. 10,000 lost for you. Cannot carry forward for any more years. Done. Next one. Loss from iron ore business discontinued in previous year 17-18. Hey, question to you. Will you set off 50,000 from B or C? B or C, 2 or 3? 50,000 of income. Should you set off from this business loss or this business loss? Why? Very good. That is the first in. It's FIFO method. You will first utilize your textile business, then you will go into your iron ore. Iron ore business, you will anyway cannot do anything because all business losses are exhausted. Therefore, you will carry forward. Done. Look at your income. 1,50,000, 1,60,000, 1,66,000. 1,66,000. Incomes to be carried forward is losses to be carried forward is HP loss of 2 lakhs, short-term capital loss of 20,000, short-term capital loss of 10,000, loss from business is 1,20,000, and loss from owning and maintaining 25,000. Done. Mr. A is furnishing you the following information for 31st March 2023. Income from plying of vehicles is given as 3,20,000. Income from plying of vehicles is given as 3,20,000. He owns 5 light good vehicles during the year. Okay. Business as per PGBP is given as 3,20,000, but he owns 5 light good vehicles, which means he is eligible for presumptive. How much is the vehicles? 7,500 into 5 into 12. 4 lakh. Will you opt for presumptive or will you go for normal? I will go for normal. Income from retail business of garments computed as per books is given as 7,50,000, in which his sales turnover is given as 1.35 crores. 1.35 crores. Can he opt for presumptive? He can opt for presumptive. Mr. A has declared the income on presumptive basis for the first time in 22-23. Last year itself he determined it based on presumptive. Assume 10% of the turnover was received in cash and the balance is received through account pay check, and all the payments in respect of the expenditure was made through account pay check. What is happening? 1.357 crores lende 10% is in cash, which means that will be at the rate of 8%. Balance will be at the rate of, give me the number. 13,57,000 at the rate of 8%, balance at the rate of 6%. Sorry, da. Which one? 1 lakh? Okay. Total both? 8,41,340. Question to you. Will you opt for presumptive? Will you opt for normal? Will you opt for presumptive or normal? You can opt out. You have the option to opt out, but the problem is if you opt out, next to 5 years you cannot claim. Can you opt out? Yes, you definitely can opt out. Will you opt out or will you opt in? I will opt out. The reason is very simple. This is one 7,50,000. Kila, if you see, there is something called brought forward depreciation of 1 lakh rupees, which means if you opt in, what will happen? Your income itself will directly become 8,41,000. Depreciation also gone for you. Depreciation also gone for you. But if you don't opt in, it is 7,50,000 minus 1 lakh, which is nothing but 6,50,000. Yes or no? Yes or no? Last item, share of profit in case of a firm in which he is a partner. Exempt from tax. So you have two options. Option number 1 is you can opt in or you can opt out. If you are opting in, the provisions are 4,50,000 plus 8,41,340. If you opt out, it is 3,20,000 plus 6,50,000. Total both 12,91,340, 9,70,000. Yes. Yes. Look at the question. Compute the taxable income of Mr. A and his tax liability for the assessment year 23-24 with the reasons for your computation, assuming he does not opt for 115 BSc. You have to give both the answers. You have to come and say if you opt in, it will be 12,91,340 and then compute the tax on that. If you opt out, it will be 9,70,000 and then you will compute tax on. Clear? It's less than 2 crores. It's less than 2 crores. You have an option right now. If you opt for presumptive, it will be no tax on it. If you don't opt for presumptive, it is tax on it. Question has not clarified anything, no? So you can choose for both the options. Question number 4. The following are the details relating to Srivatsana. The following are the details relating to Srivatsana, a resident Indian, age 57 years, relating to the year ended 31st March 2023. Always look from losses. Income from salaries 2,20,000. Hold. Loss from house property. What to do? Set off fully. Set off fully. Number will become 30,000 for salaries. 30,000 for salaries. Next, loss from cloth business. This is PGBP loss. This is PGBP loss. Hold. Income from speculative business. Can you set off? You can. Always look from loss perspective. Always look from loss perspective. Loss from PGBP can be set off against speculative income. Speculative income loss cannot be set off against PGBP income. Always look from loss perspective. Careful. Okay. So 2,40,000 will be set off fully. This becomes 0. This balance number is 2,10,000. Hold it. Hold it. Loss from specified business covered under 35 AD. What will you do? Check for specified business income. Do you have any specified business income? No. Directly. Long-term capital gains from sale of urban land, 2,50,000. Can you set off your business loss against LTCG? Yes, why not? 2,10,000 will get utilized here, which means this becomes 0. This becomes 40,000 of LTCG. Correct or not? Yes. Loss from card games. Ignore. Income from betting. Can you set off your business loss against income from betting first? Can you set off a business loss against income from betting? No. So therefore, this will directly be taxed. Winnings is 45,000. Yes, sir. Yes, sir. So what is the incomes left for you? You have a salary income of 30,000, long-term capital gains of 40,000, winnings of 45,000. Winnings of 45,000. Total all the three 1,15,000. Huh? 1,15,000 is your gross total income. Question is saying compute the total income. Compute the total income. Last item is shown as life insurance premium. Amount is 45,000. 80C. Amount eligible is why? When we did rates of taxes, I clarified to you, Chapter 6A is not eligible on any special tax rates. Chapter 6A is not eligible on any special tax rates. Chapter 6A cannot be claimed on LTCG, cannot be claimed on winnings, only can be claimed on salary. Can only be claimed on salary. Therefore, you minimum have to pay tax of 85,000. You minimum have to pay tax on 85,000. Clear? Clear? Can you compute tax? What is the tax? Zero. How? What is 45,000 into 30%? What is the tax? $1,000. வட்டி பண்ணாலும் அதேதான் பிரச்சனை. What are you missing, people? What are you missing? ஏய் ரெண்டுமே ஸ்பெஷல் டாக்ஸ் ரேட் என்ன 115 பேஸ் உனக்கு quick. What is the tax? Huh? No. Ma, you have two kinds of income. One is your up. You have two kinds of income. One is your LTCG, the other is your winnings. Your basic exemption limit not exhausted, which means you will utilize LTCG fully. You will utilize LTCG fully. Winnings will not go into basic exemption limit. Multiply at the rate of 30%. Multiply at the rate of 30%. Number is 13,500. Are you eligible for rebate? Yes, you are eligible for rebate. Number is 1,000. Cess yaar poduvan. Tax is 1,040. எப்படி பண்ணாலும் ஏதோ ஒரு மிஸ்டேக் வந்துதான் இருக்கு. ஜிஎஸ்டி நம்பி போனா பாஸ் ஆக முடியாது. கண்டிப்பா பாஸ் ஆக முடியாது. Last 3 attempts, GST is the reason people are failing. From the last 3 attempts, for some reason, everyone thought GST vechirda pass aaglam. Kadasila paatha GST paper was so tough that people did not attempt the paper itself. At least my students who have passed is only passed because of income tax. They came and they showed me the paper. They came and said, Rahul, 100 marks paper. 60 length, they got 52, 53. And indirect tax, they got 1 mark, 2 mark, 4 mark. MCQ tappichanga, and the mari pochu. Kavanama in the paper. GST and all, don't trust and go, nothing will happen. Okay. For some reason, if you use your head properly, these and all we have done hundreds of times now. There is nothing new which I taught you right now. The reason I asked you for tax, you understand there will be some trick. Okay, and I'm not asking anything different only. The same mistake you did on the start of the class at 4 o'clock, the same mistake you're doing right now again. Okay, we did the same thing, 4 o'clock. Na appe sonna unexhausted basic exemption limit utilize பண்ணிக்கோங்கன்னு சொன்னேன். 4 o'clock பண்ணோமா? இப்போ என்ன டைம் ஆச்சு? 4 o'clock சொல்றேன். 2 o'clock பண்ணோமா? இப்போ என்ன டைம் ஆச்சு? 5:30 ஆச்சு. அதுக்குள்ள மறந்துட்டீங்க. இன்னும் 2 மாசம் இருக்கு எக்ஸாமுக்கு. எங்க தான் போறது? Last question. The following information is furnished by Mr. Shankar for the financial year 22-23. Income from let out of the property is given as 3,50,000. Income or loss? Income or loss? Income, hold. Interest paid on housing loan for self-occupied property. This is your loss from SOP. Loss from SOP. Loss from SOP you can utilize against your income from LOP. Which means income from LOP is now 1,50,000. This has gone utilized. Income from textile business, PGBP, 5,75,000. Then brought forward business loss of AY 1920. Hold. Short-term capital loss of 70,000. Gain or loss? Oh, loss. Sorry. Loss. Hold. Brought forward long-term loss. Brought forward long-term loss. Hold. Long-term capital gains on sale of house. Question to you. Will you set off your long-term capital loss which is brought forward first or short-term capital loss first? Always set off the first current year losses. Always set off current year losses. This has become 0. Long-term capital gains is 5,000. That 5,000 you can utilize from your long-term capital loss. So long-term capital gains becomes 0. Long-term capital gains becomes 0. Brought forward loss will become 85,000 to be long-term PGBP loss irukka? Onnadana irukku. In income tax only one long-term is there which is under capital gains. Interest on enhanced compensation from government for acquisition of land in 2018. What to do? Which income is this? IFOS. Amount taxable is? Why? 50% standard deduction. Dividend received from ABC Andhra Pradesh. IFOS. Deposit made on 21/2023 in Public Provident Fund. What is this? 80C. Loss from owning and maintaining horse races. Carry forward. Loss from gambling. Ignore. Shankar filed the return for AY 1920 after the expiry of due date of filing the return of income. What is the problem? Ignore. 1,05,000 is ignored. You are required to compute the total income of Mr. Shankar under the proper heads of income and also state the loss to be carried forward. Let's understand what and all we have missed. IFHP we have given, 2 lakhs has been utilized, 5,75,000 is PGBP income, 1920 loss ignored, short-term capital loss fully set off, correct? Short-term capital loss has been fully set off, brought forward long-term capital loss has been carried forward, IFOS income is 2,50,000, dividend income is 15,000, 80C is what is pending, loss from owning and maintaining is carried forward, nothing else is pending, therefore total this up. 9 lakh 90, 9 lakh 90,000 is your GTI. In this you will allow something called as 80C. Number is 75,000, 75,000. Claim total income as 9 lakh 15,000. Done. This marks the end of your set of chapter. Shall we take a 10 minutes break? What is the time now? 4:50. We'll take a 10 minutes break, come back at 5 and we'll do chapter 6. The next chapter called as chapter 6. We are entering the next chapter called as chapter 6, where basically what we are coming and saying is we are in golden rule number 7, I think. 9 போய்ட்டோமா 9 சரி ஏதோ ஒன்று. We are in golden rule number 9 where we are talking about chapter 6. We are talking about chapter 6. Basically what this income tax is coming and saying is, boss, we need to compute tax on total income. We need to compute tax on total income. But what you did until this chapter is all forming part of your gross total income. So you need to allow something called as chapter 6 on those so that you arrive at something called as total income. Basically what this chapter is coming and saying is there are certain items, certain investments, certain expenditures which you have which will not be linked to any head. So therefore I am giving you a general section called as chapter 6A where you can claim the deductions. The rule for this chapter is very simple. Rule number 1, you can only claim this on slab rate incomes. You are not permitted on capital gains. You are not permitted on your specials also. You are only permitted on your slab rate incomes. This is rule number 1. Yes, starting with that rule, you need to first understand what kind of incomes do we have. We are starting with 80 number C. We are starting with section number 80C. This basically talks about any kind of investments which you do. That is where you talk about 80C. The relevant ones from exam perspective are your LIC first. What? LIC. Income tax comes and says that, boss, if you have made any kind of premium for LIC, I will come and check when did you take this policy. If you have taken this policy before 2012, I will ask you, are you paying a premium more than 20% of your sum assured? 20% of your sum assured. If you are paying a premium more than 20% of your sum assured, I will allow a deduction only up to 20%. If you are taking it after 2012, I will allow only 10%. But if you are taking it for a handicapped person, I will allow 15. So what is the rule? 2012 ku munadi 20, adukaprom 10. If you are handicapped, 15. That is what the policy says. First item called as LIC. Whom can you take an LIC on, Rahul? You can only take it on your children and spouse. No LIC for your parents. Okay, you can only take it for your children and spouse. Children also, if children you can take for anyone. Whether they are dependent or otherwise. Yes, this is for 80C. If you are done with LIC, they are coming and saying, boss, if you have made any kind of contribution to PF, it can either be a statutory provident fund, a public provident fund, or a recognized provident fund. Can you make a contribution to URPF? No, you cannot make any contribution to URPF. Make a contribution to any of these 3 items, you will get a deduction. Whose deduction? Employer or employee? Employee. Employer order deduction will not come. Employee order deduction will come to you. Then they came and said, if you have any kind of housing loan, you have repaid any kind of housing loan, any kind of stamp duty charges on those housing loan and all those things, you can claim that as a 80C deduction. Apart from that, if your exam comes and says that you have done some savers deposit, tax saver deposit, big deposits you have done, Sukanya Samriddhi scheme, weird names you see, all exempted. Any kind of weird names you see will be all deduction. Please understand, there is a difference between donation and investment. If you see the word called as fund, you are contributed to some fund and all, it means you are doing a donation. That will be under 80G. If you are making any kind of payment where the question somewhere looks like it's an investment, you are making into savers deposit, Sukanya Samriddhi scheme, it's an investment, that will be 80C. You don't have to remember all those things. You just have to remember the logic. Okay, logic purinja porom. Okay, so in exam you have to check for one thing. Check whether it is an investment for NHI or REC. If it is so, then it is 54 EC. If it is not that, check for it whether it's an investment or a donation. If it is an investment, it is 80 C. If it is a donation, it is 80 G. Clear? Yes, read and see. 80 C, applicable for life insurance premiums. Individuals, if it is self, spouse and child. For HUF, it is a member of the HUF. If it is before 2012, it is 20%. After 2012, 10%. After 2013, for handicapped, it is 15%. Any kind of PF payments, and then they are telling some kind of Sukanya Samriddhi scheme, then any kind of repayment of housing loan, deposits, long-term deposits made, any kind of tax saver long-term deposits made, NSC, NABARD, mutual funds, notified deposits, superannuation fund, annuity plan, pension fund, government schemes, National Housing Bank, unit linked insurance, weird investments, all are 80C. All are 80C. Clear? Yes, these are all your 80C. Nadula, somewhere I think it is here. Tuition fees paid for full-time education for any 2 children. Tuition fees paid for any 2 children will be also allowed as a deduction under 80C, provided the education is in India. Education is in India. If the employer gives you any kind of child education allowance, claim it under salaries. If they are not giving you anything, whatever fees you pay will be allowed under 80C. Clear? Yes. 80C overall limit is 1,50,000 for the full year. For the full year, you can claim a maximum of 1,50,000. That's what the rule comes and says. Clear? Yes. With this 80C getting over, you now have 80CCC. 80CCC. It comes and talks about pension fund. What? Pension fund. It comes and says whatever contribution you make to pension fund will be allowed as a deduction. No limits. No limits. Okay. Then coming to 80CCD. This is pension scheme. That was pension fund. This is pension scheme. Okay. Understand the difference. That is pension fund. This is pension scheme. 80CCD comes and says, boss, tell me whether you are doing it from an employer perspective or an employee perspective. If you come and say it is from an employer perspective, meaning employer is contributing to your NPS. Employer is contributing to your NPS. You can claim a deduction of 10% of salary. You can claim a deduction of 10% of salary. Salary here means basic plus DA. Forming part. Basic plus DA. Forming part. No turnover commission, no other things. Basic plus DA forming part. Okay. Yes. You can claim a maximum of basic plus DA forming part, 10% of your salary. What happens if you pay more than 10% of salary? No deduction for you, no deduction for employer also. No deduction for employer also. We discussed under PGBP, any contribution up to a maximum of 10% alone can be claimed. Beyond that, it becomes disallowance in the hands of employer. Yes, same provisions. Okay. So what you can claim as a deduction is only 10% of your salary. Done. If you are not doing from an employer perspective, let's say this is for private employers. What if you are a government employer? What if you are a government employer? 10 will become 14. 10 will become 14. So if it's an employer contribution, if it is non-government, it is 10%. If it is government, it is 14%. If it is government, it is 14%. Rahul, no, I am not an employer. I am an employee. Meaning, I am contributing as an employee contribution. I am contributing as an employee contribution. 2 deductions for you. One, flat 50,000. Flat 50,000. Whatever contribution you make, first 50,000 you can claim direct deduction. First 50,000 you can claim direct deduction. Second, they are coming and saying if you still have some balance left, you can claim 10% of salary. You can claim 10% of salary. Done. 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 Yes. Yes. Let's say for example, your salary for the year is 20 lakh rupees. How much? 20 lakh rupees. Your salary for the year is 20 lakh rupees. And employer has proposed to contribute 10%. Employer has contributed how much? 10%. In this case, how much can you claim from employer perspective? How much can you claim from employee perspective? Hey, once again, how much did the employer propose? 10. I'm sorry. Okay. Employer has proposed 2,50,000. Answer a good time. Sorry. Employer has proposed 2,50,000. In this case, how much can you claim? Employer contribution, you will claim 10%, meaning 20 lakhs to 10% is 2 lakhs. So employer contribution, you will claim 2 lakhs. In employee contribution, first to give 50,000 flat. First to give 50,000 flat. How much left off you have now? How much did you contribute? You contributed 2,50,000. How much can you claim as a reduction? 50 you claim. How much left off? 2 lakhs. This 2 lakhs will be subject to 10%. What is 10%? 20 lakhs. 20 lakhs to 10% is 2 lakhs. So which means from employee perspective, you will claim 2 lakh 50. From employer perspective, you will claim. Clear? Not clear? Clear? Yes. This is called as 80 CCD 1 and 1B. This is called as 80 CCD 2. 80 CCD 2. Employer contribution is 2, employee contribution is 1 and 1B. What is 1B? 50,000 is 1B. This is 1. This is 1. Clear? 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 Yes. This is what is looking for NPS. This is what is looking for NPS. We are done with 80C, 80CCC and 80CCD. 80CCD. Now comes your overall limit. Now comes your overall limit. Income tax comes and says, boss, when it comes to 80C plus 80CCC plus 80CCD 1. 80CCD 1. All put together, you cannot claim more than 1 lakh 50. All put together, you cannot claim more than 1 lakh 50. Abdina enna artho Rahul? You can claim the balance 50,000 of employee contribution. Of employee contribution plus 10% of salary for your employer contribution. Plus 10% of salary for your employer contribution. Okay? Yes. When it comes to chapter 6A, your 80C along with triple C along with employee contribution 10% will be subject to overall limit of 1 lakh 50. Separately, you can claim 50,000 for employee. Separately, you can claim 10% for employer. Done? Done? Yes. Coming to 115 BSc, 80C not eligible for 115 BSc. 80C not eligible for 115 BSc. 80 triple C also not eligible for 115 BSc. 80 CCD only subsection 2 is eligible for 115 BSc. Abdina enna artho Rahul? Employer contribution mattum you can claim. You can claim your employer contribution. Employee contribution fully not allowed. Employee contribution fully not allowed. So 80C not allowed, 80 triple C not allowed, 80 CCD employee contribution not allowed, employer contribution allowed. Employer contribution allowed. Clear? Yes. Yes. This marks the end of your C. This marks the end of your C. After C comes D. After C comes D. Provisions are for medical insurance. What are they for? Medical insurance. Here we are going to take a detour. We are going to come and say, boss, medical insurance can be claimed for self, your child and your parents also. Self, spouse, child and parents. But here is where the change happens. They are coming and saying parent, anyone you can claim. Parent, anyone you can claim, whether dependent or not. But child, only dependent. Child only dependent. Please understand, 80C we came and said child no dependency, parent not eligible. In 80D we are coming and saying child dependency required, parent no dependency required. Parent no dependency required. Clear? Yes, we are into medical insurance. We are into medical insurance. Income tax comes and says prepare 2 buckets. Prepare 2 buckets. Bucket number 1 is for you, your child and your spouse. You, your child and your spouse. Bucket number 2 is for your parents. Bucket number 2 is for your parents. Each bucket you can claim 25,000. Each bucket you can claim 25,000. But yes, if any one of those buckets has a resident senior citizen, that bucket will become 50,000. What? Each bucket you will get 25,000. But any one bucket also, if there is a person with an age more than 60 years and you are a resident, that bucket will become 50,000. That bucket will become 50,000. What do you mean, Rahul? If you look at the provisions, you will understand. If you are an individual, none of the buckets have a resident senior citizen. Your bucket will get 25,000. Your parents' bucket will get 25,000. Deduction will be 50,000. If your parent are senior citizen, then in that case, your bucket will get 25,000. Parent bucket will get 50,000. Total bucket will get 75. If you are also a senior citizen, your bucket will also get 50,000. Parent bucket will also get 50,000. Total deduction will become. Scenario number 4. Possible? Not possible? Can it be so that your bucket is senior citizen, parent bucket not senior citizen? Possible? Not possible? India not possible, foreign possible. India not possible, foreign possible. Foreign la poitu parunga. Priyanka Chopra marrying Nick Jones. நாளுக்கு யார் குழந்தைன்னு யாருமே தெரியல. Very difficult it becomes. Yes, foreign may be possible. India பொறுத்த வரைக்கும் not possible. If they come back to India and they become a resident here, then things will change. Then I don't know. As of now, scenario ICI பொறுத்த வரைக்கும் not possible. ICI பொறுத்த வரைக்கும் not possible. Clear? Yes. So you have two buckets. What are the two buckets? One for self, spouse and child. One for parents. One for parents, in which you can claim 25 each or 50 if you are a resident senior citizen. What are the expenditures allowed, Rahul? They are coming and saying if you are a normal citizen, you are allowed the medical insurance. What are you allowed? Medical insurance. You are allowed medical insurance. But if you are a resident senior citizen, if you are a resident senior citizen, I'm giving you two options. If you have an insurance, claim insurance. If you don't have an insurance, I'm giving you the benefit to claim your actual expense also. I'm giving you the benefit to claim actual expense also. Only if you are a resident senior citizen. Only if you are a resident senior citizen. Clear? Yes. Check here. What are the deductions allowed? If you are a person, you are allowed medical insurance. But yes, if you are a resident senior citizen, you can claim your actual medical expenditures also. You can claim your medical expenditures also. Apart from this, what am I allowing is if you make any kind of contribution to central government health scheme, if you make any contribution to central government health scheme, and if you do some kind of preventive health checkups. What you do? Preventive health checkups. But in a preventive health checkup, I'm giving an overall limit. I'm coming and saying both the buckets together, you cannot claim more than 5k. You cannot claim more than 5,000. Where have you learned this number? Salary. Entertainment allowance, then agriculture income. Very good. Salary gifts. One more you told, gift na adha sonniya. Okay, gift under salaries, agriculture income and entertainment allowances. Where you learned? Next one here. Where have you learned 25,000? Have you learned it somewhere else also? I have not learned it. Where have you learned 50,000? One more. Gift also. You have learned standard deduction also. Done? Yes. Where have you learned 2 lakhs? HP. Where else? Rendu undadanda. Anywhere else? Have you learned it anywhere else? No, right? Checking head mana things. Yes. So what do you have? You have 2 kinds of buckets. In the 2 kinds of bucket, you can claim your medical insurance. You can claim any kind of CGHS scheme contributions. You can claim your preventive health checkup. But you can also claim your medical expenditure if you are a resident senior citizen and you don't have a insurance. You don't have an insurance. For you to be eligible under 80D, you have to ensure that no payments are happening in cash. No payments are happening in cash. Any payment in cash is not allowed as a deduction. Any payment in cash is not allowed as a deduction except for one item called as preventive health checkup. Your preventive health checkup can be in cash. You can make your payments of preventive health checkup in cash. Apart from that, none of the items can be made in cash. Clear? Clear? Yes. This is the end of your 80D. This is the end of your 80D. Then comes something called as 80DD and 80U. 80DD and 80U. Here is where things take a change. Before I get into it is also 80D also not eligible for 115 BSc. 80D also is not eligible for 115 BSc. Done? Yes. Coming to 80DD. 80DD basically comes and says if you have a handicapped person at home. It can either be self or it can be someone else you are taking care of. If you are taking care of an handicapped person or you are itself handicapped, you can claim a deduction of 75,000 flat. 75,000 flat. What do you mean by flat? If you have incurred 1 rupee also, you will get 75,000. If you have incurred 5 crores also, you will get 75,000. Okay. This is one place where we are taking a detour because until now we told you should make your actual expenditure subject to that limit. Here we are saying I don't care what expenditure it is 75,000. It is 75,000. So 75,000 is for a normal handicapped. If you are seriously handicapped, it is called as 1,25,000. Seriously handicapped is 1,25,000. Normal handicapped is 75,000. It can be for self or it can be for someone whom you are taking care of, who is a dependent relative or a member of a HUF. Provision not applicable for 115 BSc. You cannot claim this deduction under 115 BSc. Done. Both. Done. Yes, after 80 double. If you are severely disabled, 1,25,000. If you are severely disabled, it is 1,25,000. If you are normally disabled, it is 75,000. That's all is the provision. Clear? Yes. After that, you have something called as 80 double DB. 80 double DB. This provision basically comes and says that if you are doing any kind of medical treatment for a specified disease, what are you doing? Medical treatment for a specified disease. What do you mean by specified disease? Don't know. Income tax will not come and clarify. It is a part of rules. ICI is not notified it for you. Exam portha varaikum they will come and tell it is specified disease. If they tell that there is a specified disease, what do you do? Which are the provisions which will get triggered? One is 80 double D. That's nanu soltan. Adu thavara. Where else have you learned this word called specified disease? Very good. You have learned it under salaries, medical perquisites. In medical perquisites, if a treatment of specified disease is happening, whatever employer gives as a perquisite will be exempt from taxes. You are now into specified disease of 80 double DB. This provision basically comes and says if you are a senior citizen, you will get a deduction of 1 lakh rupee. If you are not a senior citizen, you will get a deduction of how much? 40,000. You will get a deduction of 40,000 rupees. If at all you have incurred any kind of expenses. For specified disease. This is not a flat number. This is subject to limit. You pay 40,000, you will get 40,000. You don't pay 40,000, no deduction for you. Okay. Yes. Again, not eligible for 115 BSc. Coming to the next section called as 80E. This section comes and says that if you have taken a loan for your child for an higher education. If you have taken a loan for your child for an higher education, then in that case, whatever is the interest on that loan can be claimed as a deduction up to a period of 8 years. You can claim the interest on that loan as a deduction. Please understand, what is allowed as a deduction is the interest on loan. What is allowed as deduction is interest on loan, not the loan amount itself. If you are repaying the loan, that is not allowed as a deduction. Only the interest on that loan component is allowed as a deduction. Clear? Yes. After 80E comes your 80EE and EEB. 80EE and EEB. Nadule, you have something called 80EE also. Yes, something called 80EE also. Likelihood of this coming in exam is very remote. The dates are very old. So the provisions are 80EE and EEB. EEA comes and says that if you have taken any kind of house for a self-occupation, in that case, whatever is the interest which you pay, first claim deduction under HP. If you are not able to utilize the full deduction under HP, you can come to this section under EEA and claim an additional 1,50,000. Where have you seen this number? ATC. You will see this number in 80C. Yes, you can claim a maximum deduction of 1,50,000 provided certain conditions are given to you. What are the conditions? Your stamp duty value of the property should not exceed 45 lakhs. You should have taken the loan between 1/4/2019 to 31st March 2022. Satisfy both the conditions, you will get a deduction of your interest on house property over and above your HP. This is what the provisions come and say. And here just a catch point, they have come and clarified NBFCs are not covered. You should take the loan from a financial institution, meaning banks and all those places. NBFCs not covered. Clear? Yes. Next provision are your 80EB. Copy paste provisions from your from 80EA. But the provisions now come and say you are buying an electronic vehicle. What are you buying? Electronic vehicle. If you have taken a loan for purchase of an electric vehicle, whatever is the interest on that loan can be claimed as a deduction. Subject to an overall limit of 1,50,000. Here is where they have come and clarified NBFCs are also covered. Please notice the date. In the earlier one, the date ended on 22. Here the date is ending on 23. Meaning for your attempt Financial year 22-23 is your exam. In that year also, if you have taken a loan, you are eligible for deduction. But in that year, if you have taken a housing loan, not eligible for deduction. Clear? Both EE and EEB not eligible for 115 BSc. Both EE and EEB. Hey Rahul, another eligible. Full chapter 6A is not allowed. Full chapter 6A is not allowed except for 80 CCD2 and 80 JJAA. 80 JJAA, அது தவிர இருக்குது everything is not eligible. அதனால ஒண்ணொண்ணா போயிட்டு இருக்கும். Okay? Okay, we completed 80 EEB. After E comes F. F is not there for exam. Comes G. G is your donations. G is your donations. From income tax perspective, we have splitted our donations into 4. We have split our donations into 4. Income tax comes and says was split into 4 different buckets. 2 buckets are eligible for 100%, 2 buckets are eligible for 50%. What is the difference? In that 2 buckets of 100%, 100% is fully eligible, second 100% is subject to a limit. In the next 2 buckets, 150% is fully eligible, second is 50% with a limit. How do you remember, Rahul? You have 4 buckets, correct? A, B, C and D. A, B, C and D. Let's say these 2 are 100%. These 2 are 50%. Top items are no limit. Bottom items are with limit. Bottom items are with limit. Yes. In bucket number A, they come and say any kind of minister you see. Any kind of minister you see is 100% with no limits. Rahul, what do you mean by minister? The word should come and say prime minister fund, chief minister fund, this minister fund, that minister fund. You see the word minister, exempted fully. Exempted fully. Done. Here comes your Nehru and Gandhi. Here comes your Nehru and Gandhi. अच्छा सॉरी कैटेगरी तपा पोटेना राइट मा category B is your Nehru and Gandhi. Category B is your Nehru and Gandhi. Any kind of fund where you see the words Nehru or Gandhi, you will be eligible for 50% without any limits. 50% without any limits. There is only one exception. There is only one exception. Here comes something called as PM Drought Relief Fund. PM Drought Relief Fund. Adu thavara everything goes into category A. Adu thavara everything goes into category A. Only one minister is in B. Only one minister is in B. Balance ministers, everyone is in A. Balance ministers, everyone is in A. This is the last attempt this is happening. This is the last attempt this is happening. Next to Finance Act, this has been removed fully. Next to Finance Act. Next to Finance Act, it has been removed fully. For your attempt, it is there. Do you want to know? For your attempt, it is there. For your attempt, Nehru and Gandhi will be eligible for 50%. Prime Minister will be eligible for 100% except for Prime Minister Drought Relief Fund. Category C comes and says if you have done any kind of investment in Olympics or family planning. If you have done any kind of investments in Olympics or family planning, that will be 100% with limits. 100% with limits. Here comes your charitables. Here comes your charitable organizations. Any charitable organizations you make investments, it is 50% with limits. 50% with limits. Clear? Yes. Look. National Defense, Prime Minister, Chief Minister, Minister, National, State Government. This and all is big. National. This and all you don't know, 100%. When you don't know what it is, check whether it is a investment or a donation. If it is a donation, it becomes into 100%. It comes into 100%. Nehru, Prime Minister Drought Relief Fund, Gandhi. Okay. family planning, Olympics, charitables. Okay, okay, 4 buckets for you, 4 buckets for you. இந்த மட்டும் படிச்சா போறோம், இது மட்டும் படிச்சா போறோம். அது தவிர don't remember all those things, don't remember all those things. 4 வார்த்தை மட்டும் படிச்சா போறோம். Okay, now the question is, what do you mean by qualifying limit, Rahul? Income tax comes and says, boss, qualifying limit is 10% of your TI. What 10% of your TI. TI is total income. %10 of your TI excluding ATG. Basically, they are coming and saying, boss, keep ATG as the last item. Keep ATG as the last item. Compute your full deductions. Compute your full deductions. Whatever is the number which you are left with, adukku mele you put 10%. Adukku mele you put 10%. That is the amount which you can donate. Please understand, that is not the amount which you can deduct. That is the amount you can donate. Abdina enna artho, Rahul? Let's say, for example, your TI excluding total income comes at 2 lakhs. TI excluding ATG comes as 2 lakhs. You can only claim 20,000 as a donation. 20,000 as a donation. If I have deposited this 20,000 in charitable organization, I will get a deduction of 10,000 only. I will get a deduction of 10,000 only. I cannot come and say, Rahul, I will deposit 40,000 rupees so that I can claim 20,000. No. The number of 10% is the donation amount. It's not the deduction amount. It is not the deduction amount. Clear? 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 Yes, this is what the provisions come and say. You have 4 buckets. 2 buckets are 100%, 2 buckets are 50%. 100% without any limits is your national and minister. National and minister. 50% without any limits is your Gandhi and Nehru. Gandhi and Nehru, except for one more item called as PM, Drought Relief Fund. Category C comes and talks about 100% with limits, which is your family planning and Olympics. Category D comes and says 50% with limits, which is your charitable organization. Limits are basically 10% of your total income without including ATG. Without including ATG, that is the deduction amount or donation amount. Donation amount, that is your donation amount. Second rule, they are coming and saying, boss, if you want to claim something as ATG, you should only make the payment in monetary terms. No kind allowed. No kind allowed. If you are making the payment in monetary terms, please ensure that the payment is happening other than by cash. Other than by cash. If you want to make the payment in cash, you can claim up to 2,000 maximum. Claim up to 2,000 maximum. Abdina enna artho, Rahul? If you have deposited someone cash, that cash should not exceed 2,000 rupees. If you have deposited 3,000, donation allowed is 0. Donation allowed is 0. 2,000 deposit panna fully deduction. 2,000 ka mela 1 rupee deposit panna 0 becomes deduction. 0 becomes a deduction. Clear? Clear? ATG, copy paste something into 80GG. 80GGB and 80GGC provisions basically come and say, boss, if you are giving a donation to political parties, what parties? Political parties. If you are giving any kind of donations to political parties or trust, we learned this in PGBP, correct? We learned it in PGBP. If you are making any kind of donation to your political parties or trust, whatever donation you make, 100% allowed as a deduction. 100% allowed as a deduction. But yes, no payment should happen in cash. No payment should happen in cash. 1 rupee also paid in cash, gone. Gone. 1 rupee also paid in cash, it will be assumed it is black money. That's all. Because obviously you're making the payment to political parties. No second thought about it. Okay. So any kind of donation happening in cash, not allowed as a deduction. Clear? Yes. Next comes 80GGA. 80GGA comes and says, if you are not claiming scientific research expenditure under PGBP, if you're not claiming scientific research expenditure under PGBP, you can claim it under 80GGA. You can claim it under 80GGA. Never coming for exam, don't worry. Never coming for exam, don't worry. PGBP, scientific research பொறுத்த வரைக்கும் PGBP தான் கொடுப்பாங்க, இல்லைனா கொடுக்க மாட்டாங்க. Okay, so 80GGA you can ignore. Exam பொறுத்த வரைக்கும் you need to know 80G, 80GGB. 80G and 80GGB both are not eligible for 115 BSc. Both are not eligible for 115 BSc. Done? Done. Next, in the middle there is something called as 80GG. 80GG comes and says that if you are not claiming HRA, if you are not claiming HRA, please come and claim a deduction under 80GG. Exam பொறுத்த வரைக்கும் this deduction is never going to be eligible. Exam பொறுத்த வரைக்கும் this deduction is never going to be eligible until now. From my experience, ICA whenever has given this has straightforward come and say deduction 0, deduction 0, deduction 0. That's all. So exam பொறுத்த வரைக்கும் mug up and go 80GG வந்தா deduction. Anyway, it's not coming. In case it comes, put the deduction as 0 and close it off. Provisions படிக்க தேவையில்லை, too much of remembering. Okay, life easy பண்ணா ஈஸியா போய்டும். Done. 80GG deduction 0. Again, anyway deduction is 0, but if there was a deduction, 115 BSc not eligible. 115 BSc not eligible. Done. H, I, J, all final levels. All final levels. Coming to the next section called as double J, double A. Next section called as double J, double A. Provisions are basically coming and saying, if you are employing new employees, whatever salary you pay to these new employees, 30% of this salary, whatever salary you pay to these new employees, 30% of the salary you can claim as a deduction for the next 3 years. For the next 3 years. Aptina, year 1 you will get 30%, year 2 also you will get 30%, year 3 also you will get 30%. Year 3 also you will get 30%. Whatever is the employee salary, 30% of that salary will be allowed for the next 3 years. Will be allowed for the next 3 years. Subject to certain conditions. Subject to certain conditions. Condition number 1, you should be liable for tax audit. You should be liable for tax audit. Condition number 1. Condition number 2. Condition number 2. Whatever salary you pay to these employees, please ensure that the salaries is paid only by permissible modes. Whatever salary you pay to these employees, please ensure that you pay the salaries only by permissible modes. You pay by non-permissible modes, salary will be 0. Salary will be 0. Condition number 3. If you want to claim this deduction, current year there should be an increase in employee count. Current year there should be an increase in employee count. Abdina enna artho Rahul? Last year if the count was 100, this year it should be at least 101. This year it should be at least 101. If it is anywhere less than 100, no deduction. Anywhere less than 100, no deduction. Don't worry people, I'll give you the steps. Now fast up, there are some steps. I will show you all the steps. Okay, don't worry about it. Okay, what are the provisions? Provision number 1. There should be liable for tax audit. Provision number 2. You should make the payment only by permissible modes. Provision number 3. There should be an increase in employee count. There should be an increase in employee count. Provision number 4. They're coming and saying whatever employee you want to claim on, should be in this company in the current year for at least 240 days. Should be in the company in the current year for at least 240 days. If you are into footwear industry, this 240 will become 150. 240 will become 150. Done? Done? Rahul, my employee was less than 240 in the current year. What to do? Claim it in the next year. Claim it in the next year. Meaning an employee of 240 less than in the current year can become an employee of next year. 240 or 150 of the next year. Clear? Yes. Provision number 5, last provision. They are coming and saying, boss, please ensure that whatever employee you are claiming the deduction on, the salary of that employee should not exceed 25,000 per month. The salary of the employee should not exceed 25,000 per month. If the employee salary exceeds 25,000, no deduction on those employees. No deduction on those employees. And the last provision they are coming and clarifying, Rahul, please ensure that whatever employees you want to claim deduction on should be contributing to PF. Should be contributing to PF, and the contribution should happen from you and not from the government. Meaning, government should not contribute to PF. You should contribute to PF. You should contribute to PF. You satisfy all these conditions, whatever is the salary cost, 30% of that will be allowed as a deduction. How to remember the steps, Rahul? Ignoring all the provisions. Ignoring all the provisions. You will find it in my book in some place called as steps to follow. Ignoring all the provisions, you can just follow these steps. Ignoring all the provisions, if you just follow the steps, the answer will automatically come. Okay, what are the steps? Read it with me. If you are existing business, understand whether your turnover is more than 1 crore or 10 crore, which is your tax audit cases. Then if it is so, verify whether there is an increase in employee count. Step number 3, ignore all those employees who are not participating in PF or the contribution is coming from government. Then exclude all those employees who are less than 240 days or 150 days. Include all those employees who are there for 240 or 150 in the last year. 240 or 150 in the last year. Then remove all those employees who are there for more than 25,000 salary. More than 25,000 salary. Then remove all those employees who have not been paid by permissible modes. Who have not been paid by permissible modes. Whatever is your answer, that will be into 30%. Whatever is your answer will be into 30%. This will be allowed over the next. Clear? This deduction is eligible under 115 BSc. this deduction is eligible under 115 BAC. This will be allowed for you. This will be allowed for you. Clear? Clear? Yes. After J comes K. K not there. L not there. M not there. N not there. O is also not there. P is also not there. Q. Next comes Q. You have a section called as QQB and RRB. You have section called as QQB, RRB. Both are talking about royalty. Both are talking about royalty. Provisions are coming and saying, boss, any kind of royalty payment which you receive, you can claim a deduction of 3 lakh rupees. You can claim a deduction of 3 lakh rupees. Claim a deduction of 3 lakh rupees if it is in lump sum. If it is in lump sum. If it is in this lump sum, correct. If it is in lump sum, you can claim up to a deduction of 3 lakh rupees. If you are receiving it recurring, meaning every year you are receiving it, every year you are receiving it, you should ensure that the deduction does not go beyond 15% of the book amount. 15% of the revenue. Okay, revenue, okay, 15% is what you can maximum claim as a deduction. So it is 15% of the book amount or 3 lakhs, whichever is lower. Whichever is lower. In this, they additionally put a condition saying, boss, if you are receiving the royalty from outside India, receiving royalty from outside India, I will allow only those royalties which you receive in India within a period of 6 months. Within a period of 6 months. 6 months from where? End of the year. 6 months from the end of the year. Within 6 months from the end of the year, you should receive the royalty into India. If you're not receiving any kind of royalty into India, that will not be considered for the purpose of deduction. And if you are receiving the royalty in India, you should claim a deduction of only 15% of the revenue amount or 3 lakh rupees, whichever is lower. Whichever is lower. And yes, if you have claimed any kind of expense under PGBP, if you have claimed any kind of expense under PGBP, that also cannot be claimed as a reduction under 80 QQB or 80 RRP. Clear? Not eligible under 115 BAC. Not eligible under 115 BAC. After Q and R comes S, sir. S, sir. S not there. T. Coming to T, you have something called as TTA, TTB. You have something called as TTA and TTB. Provisions are coming and saying, if you have any kind of interest from savings, you can claim a deduction under 80 TTA up to a limit of 10,000 rupees. Up to a limit of 10,000 rupees. Savings can be savings account or it can be post office savings account. It can be savings account or post office savings account. Post office savings account, you will also get a deduction of 3,500 under IFRS. 3,500 under IFRS. No, Rahul, I am a resident senior citizen. What am I? If I am a resident senior citizen, I will be eligible for 80 TTB. I will be eligible for 80 TTB, where I can claim any interest. I can claim any interest, whether it is from FD, RD, savings, post office, doesn't matter. Any kind of interest I can claim as a deduction up to a limit of 50,000 rupees. Up to a limit of 50,000 rupees. Rahul, can I claim both TTA and TTB? No. No. If you are a resident senior citizen, you will go under TTB. If you are a non-resident senior citizen, it will be TTA. Clear? Clear? Yes, these two deductions are also not eligible under 115 BAC. Also not eligible under 115 BAC. After T comes U. We discussed no handicap. Done. V variko income tax povel, I know. Income tax has not gone until V. Income tax has not gone until V. Maybe by the time you reach finals, there will be 2 more. Maybe. You don't know. Okay. Right now it has restricted to 80U. We are there till 80U. Done. This marks the end of your chapter 6A. Any doubts till now? No doubts? Can we do some sums? Hey, புரிஞ்சுதா இல்ல marathon மாதிரி ஓடுச்சா? புரிஞ்சுதுல? Check. The basic salary of Mr. A is given as 1 lakh per month. The basic salary of Mr. A is given as 1 lakh per month. He is entitled to a DNS allowance, which is 40% of the basic salary. 50% of this basic salary forms part of DA, forms part of retirement benefits. Both Mr. A and his employer contribute 15% of the basic salary to the pension scheme. You are required to check what is the tax treatment. You are required to check what is the tax treatment. What is happening? Your basic salary is 1 lakh per month, which means totally 12 lakhs. Of this 12 lakhs, 15% is given by employer, 15% is given by employee. Number is 3 lakhs, 1 lakh 80, 1 lakh 80,000. So employer is ready to contribute 1 lakh 80. You are ready to contribute 1 lakh 80, correct? Yes. Now they are coming and saying, what is the deduction you can claim? You can claim 10% for employer, 10% for employee plus 50,000. So first look for employer. Your basic salary is given as 1 lakh. DA is given as 40%, but 50% of that alone is DA forming part. So technically it is 20%. Technically it is 20%, meaning your salary is 1 lakh 20,000. Correct? The salary is 1 lakh 20,000 into 12 will give you 14 lakh 40,000. You can contribute only 10% of that, meaning 1 lakh 44,000. So from employer contribution, you can only claim a deduction of 1 lakh 44,000. Yes or no? Yes, sir. Yes. Coming to employee contribution, first you will park 50,000. First you will park 50,000. How much are you left with? 1 lakh 30. How much can you contribute? 1 lakh 44. How much have you contributed? 1 lakh 30. Can you claim 1 lakh 30 fully? Yes. So from employee perspective, you will claim 1 lakh 80. From employer perspective, you will claim 1 lakh 44. Clear? Yes. ஏதோ பயமா இருக்கு யூடியூப் ஓட்டுதா நினைச்சேன் ஓட்டுதா செக் பண்ணு it is showing live for me in YouTube இங்க மட்டும் லைவ் காமிக்குது தெரியல சரி ஏதோ shall we yes question number 2 Mr. A is of the age 40 years has paid a medical insurance premium of 20,000 rupees to ensure the health of him as well as his spouse. We are in section number 80D. He also paid a medical insurance premium of 47,000 to ensure the health of his father who is not dependent on him. Allowed, not allowed? Allowed, not allowed? Allowed. Dependency not a criteria for 80D. He contributed 3,600 to central government health scheme during the year. For self or parent? Self. He incurred 3,000 in cash on preventive health checkup for himself and his spouse and 4,000 on health checkup for the father. Allowed, not allowed? Cash payment. Preventives allowed. You are required to compute the deduction under 80D. One bucket is self, one bucket is parent. In self, you have paid how much? 20,000, correct? In self, you have paid an insurance of 20,000 rupees. He also paid a medical insurance of 47,000 to ensure the health of father who's 63. Allowed, not allowed? Can you claim fully? Yes. Resident senior citizen, bucket is 50,000. You have taken only 47. He contributed 3,600 for self. He has incurred 3,000 in cash on preventive health checkup for self and 4,000 for parent. Can he claim the full? No, he can only claim 5,000. Now, which person should get 5,000 is the question, correct? Look at the right side of the bucket. You have only utilized 47,000. You still have a bucket of 3,000. So, it's best to give them first. It's best to give them first. Utilize the full bucket. Utilize the full bucket. If you have utilized the full bucket, how much can you maximum claim? 2,000. Correct? How much can you maximum claim? 2,000. How much does this become? 25,600. Can you claim 25,600? No, you can only claim 25,000. So you will claim 25 for self, 50 for parent. Total you will claim 75,000. Done. Done. Yes. Yes. Next question. The following are the particulars given for Mr. A, Mr. B, Mr. C and Mr. D. Mr. A is having a loan of 43 lakhs, has taken the loan from HFC Bank, taken the loan on 1/4/2021. Date of distribution of loan is 1/5/2021. Loan has been taken for acquisition of self-occupied property. Stamp duty value is given as 45 lakhs. Cost of electric vehicle not relevant. Rate of income tax is given as, rate of interest is given as 9%. First of all, this is 80 EE A. 80EE. The provisions are coming and saying you should have an SDV less than 45 lakhs. SDV is less than or equal to 45 lakhs. No problem for you. You are eligible under 80EE. Subject to SOP first. Subject to SOP first. How much is the interest? Three lakh. How did you get it? 43 lakhs into 9%. Into 9% into 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 12 by 12. Correct da சொன்னீங்க. Understand persons. When has the loan been taken? 1/5. Hey, not 1/4, 1/5. You sanctioned the loan on 1/4. You took the loan on 1/5. Your previous year, previous year. Your previous year, how much days the loan was there for? Full 12 months. Amount is 3 lakh. In this 3,87,000, 2 lakhs will go to HP. Balance 1,50,000 will go to 80EE. Section numbers not important. Balance 1,50,000 will go to chapter 6A. Please understand your years, people. Which year is there? Okay, careful on those years. Next one. 45 lakhs deposit taking NBFC 1/4/2020. Date of loan is 1/5/2020. Loan has been taken for self-occupied property. Sanction amount, stamp duty value is 48 lakhs. Rate of interest is 9%. HP, no problem. You will get the 2 lakhs. HP, no problem. You will get the full 2 lakhs. Coming to 80EEA. Will you get a deduction? No. Why? Two problems. One is NBFC. Second problem, 48 lakhs. Both the provisions are not satisfied. Next one. You have taken a loan of 20 lakhs. Deposit taking NBFC 1/4/2020. Loan is taken on 1/5/2020. Purchase is for electrical vehicles. NBFC allowed? Yes, NBFCs are allowed. Loan has been taken for 22 lakhs. Rate of interest is 10%. I'm sorry. One second. How much loan have you taken? 20 lakhs. You have taken a loan of 20 lakhs. Interest rate is 10%. Interest amount is 2 lakhs. You can only claim 1,50,000. Clear? Yes. Last one. You have taken a loan for 12 lakhs. Public sector bank. Loan is sanctioned on 30th March 2019. Loan has been taken for electrical vehicles. 18% is the interest. 18 lakhs is the cost of the vehicle. Interest rate is 10%. Are you eligible for deduction? No. Why? Loan was sanctioned in 2019. The date of loans have to be from 2019 April to March 23. It is before 2019. Not eligible for deduction. Clear? Mr. Shiva is age 58 years, has a gross total income of 7,75,000, which is comprising of salary and HP. Both are slab rate incomes. He has given you the following deductions. Focus. He's given you the following deductions. Premium paid to insure the life of major daughter. Eligible, not eligible? Eligible. Premium is paid for life insurance. Children, whether dependent or not. You are eligible for deduction. Amount has been 1,80,000. Premium paid is 28,000. Policy is taken in 2019. You are eligible for deduction of number 18,000. Medical insurance premium taken for self 12,000, for spouse 14,000. 80D deduction eligible is 25,000. Donation paid to public charitable trust registered under 80G 50,000 by way of check. This is eligible for 50% with the qualifying limits, which means we need to hold hold. Next one, LIC pension fund 60,000. 80 triple C. Donation to National Children's Fund 25,000 by way of check. 100% full deduction, no limits. Jawaharlal Nehru Fund 25,000 by way of check. 50% with limit, without limit? Without limits. Donation to approved institution for family planning 40,000 by way of check. 100% with limit, hold. Deposit in PPF 1 lakhs. 80 C. Compute the total income. Look at the left side. Left side is your overall qualifying limits. So 1 lakh plus 60,000 plus 18,000 is 1 lakh 78,000. You can only claim 1 lakh 50. What is your income? GTI is 7 lakh 75,000. Claim 80C along with triple C. 80C along with triple C. Maximum amount 1 lakh 50,000. Any other deduction do you have? 80D. Correct? 80D. Number is 25,000. Anything else? Is everything else donation? Is everything else donation? Yes. Yes, everything else is donation. Total this up. This becomes 6 lakhs. On this you will claim 10%. On this you will claim 10%. Number is, so for whatever qualifying limit amounts you have, you can make a maximum donation of 60,000. What are the qualifying limits amount? 7 and 3. Correct? Which one will you give first preference? 7 or 3? You will give preference to 7 because there you are eligible for 100%. There you are eligible for 100%. So out of the 60,000, 40,000 went for family planning. 40,000 went for family planning, which means charitable you can only claim 20. How much have you deposited? 50. You can only claim 20. Therefore, 20 eligible, 10,000 is the deduction. Correct? So let's understand our 80 Gs. What 80 Gs you have? First of all, without qualifying limits. National Children Fund, full amount of 25,000. National Children Fund. Then Jawaharlal Nehru Fund 12,500. Then family planning 40,000. Charitable organization 10,000. 50% of 20,000, therefore 10,000. Total all the three 4 60 70 to 500 80 to 500. 5 lakh 11,500. Illa 12,000. 5 lakh 12,500. Clear? 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 Yes, 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 yes. Next question. Mr. A has commenced the business of manufacturing of computers on 1st April 2022. He has employed 350 employees during the, where are we? 80 double JAA. 80 double JAA. You have employed 350 new employees during the current year. Details are given to you. Details are given to you. First 75 employees were employed on 1/4/2022. These employees are regular employees. Emoluments are given as 24,000. Is any condition violated till now? No. Hold. Next employees are 125 employees employed on 1/5. Regular employees 26,000. Eligible, not eligible? Why? Emoluments went beyond. Emoluments went beyond, ignoring point number 2. Point number 3. 50 employees 1 August. Casual employees 24,500. What do you mean by casual employees? Kila padche pathina, it says the regular employees participate in recognized provident fund while casual employees do not. Eligible, not eligible? Ignore. Last item. You have 100 employees joined on 1st September. Regular employees 24,000. Look at the date. Look at the date. You are in September. September, October, November, December, January, February, March. 7 months. 30 into 7 will give you 210. 210 or 212, 213, whatever it is. Approximately less than 240. Less than 240. Are you eligible, not eligible? Which means only one eligibility. 75 into 24,000 into 12 months. 75 into 24,000 into 12 months. Number is 2 crore 16 lakhs. This is your total salary. This is your total salary. In this, you will get a deduction for 30%. Number is 64 lakh 80,000. Easy? Yes. Next part of the question. What would be your answer if Mr. A was commenced the business of manufacture of footwear? The last employees will also become eligible because they have been for more than 150. 100 employees into 24,000 into how many months? 7 months. Please understand, it was there only for starting September. So September, October, November, December, January, February, March, 7 months. So 100 into 7 will give you 700. 700 into 24,000 is 1 crore 68 lakhs. On this, you will be eligible for 30%. Number is 50 lakh 40,000. Huh? 40,000. So if you are into manufacture of computers, your deduction is 64 lakh 80,000. If you are into manufacture of footwear, your deduction is both of these. Both of these. Da. One crore 15 lakh 20,000. 1 crore 15 lakh 20,000. Clear? Yes. Can we go forward? Yes. Examine the allowability of the following cases. Theory question. Rajan has to pay a hospital for treatment of 62,000 and spent nothing for life insurance for the maintenance of a handicap dependent. Amount deduction eligible is 75,000. Handicap. Raja, a resident Indian, has spent nothing for the treatment in the previous year and deposited 25,000 with LIC for the maintenance of handicap dependent. Same. Rajan has incurred 20,000 for treatment and 25,000 was deposited with LIC for maintenance of handicap dependent. Same. Payment of 50,000 done by check to an electoral trust by an Indian company. Allowed, not allowed? Allowed. Donation made to political parties and electoral trust fully allowed as deduction. During the financial year 22-23, Amit paid interest on loan availed by him for his son's higher education. His son is already employed in a firm. Where are we? 80. E. Eligible, not eligible? Check and tell me. Is dependency required for children? Check and tell me. Da. Not required. 80E, dependency not required, therefore fully allowed as deduction. No number given, so therefore fully allowed. Subscription to notified bonds of NABARD. 80. C. Very good. Investment, contribution, subscription, etc. in eligible or approved funds made out of income not chargeable to tax. Doesn't matter. Doesn't matter. You need to make the investment. Whether you make investment from current year income, last year income, illegal income, doesn't matter. Panna porom. An individual repays sum of 30,000 towards principal and 14,000 as interest in respect of loan taken from bank for pursuing higher education. Only 14,000 eligible. Mrs. Sheila, widow of Satish, received 7 lakhs on 1 May 2022, being amount outstanding to the credit of Satish in NPS account in respect of which deduction has been allowed under 80 CCD. Question purilala. What is the answer? Avladhan. Provisions of income tax comes and says if money from NPS is withdrawn, it is generally taxable, but if the money is given to your widow, it is generally taxable, but if the money is given on account of the death of someone, not taxable. Any money given on account of death in income tax will never be taxable. Never be taxable. Question Purunja great Purilana exam. Mr. Vishal, central government employee, contributes 50,000 to tier 2 account of NPS. This is 80C. 80C. Please understand, NPS has two kind of tiers. One is tier 1, one is tier 2. Tier 1 is under 80C CD. Tier 2 is under 80C. Received royalty of 2,88,000 from abroad for a book authored on the nature of artistic. The rate of royalty is 18% of the book value, and expenditure incurred for making this royalty is 40,000 rupees. Royalty remitted to India until 30th September is 2,30,000. Please understand what is happening. You have received 2,88,000 as royalty. In this 2,88,000 of royalty, this royalty pertains to 18%. You are only eligible for 15%. If 2,88,000 is 18%, how much is 15%? 2,88,000 into 15 by 18, number is 2,40,000. 2,40,000. So you can only claim a deduction of 2,40,000. But the problem is, question comes and says the amount remitted to India is only 2,30,000. So you can claim a deduction of only 2,30,000. But the problem again is that in your PGBP you also claimed an expenditure of. So you will only get a deduction of. Clear? How much will you tax under PGBP? How much will you tax under PGBP? 2,48,000. Your income is 2,88,000. You have claimed an expense of 40,000. Therefore, you will tax 2,48,000. How much will you claim as a deduction? Is 1,90,000. Clear? Yes. Raj Mohan is a gross total income has 6,40,000. Furnishes you the following information. Stamp duty paid on acquisition of residential house is 50,000. Which section? 80C. 5 years post office time deposits. A peria investment in the 80C. Donation to recognized charitable trust 25,000, eligible for 80G at the applicable rate. 50% with limits. Interest on loan taken for higher education for spouse paid during the year 10,000. Allowed 80E. Interest on loan for higher education, self, spouse and children. Self, spouse, children, dependent guardians. Dependent guardian. When I say dependent guardians, basically you are the guardian of someone. You are the guardian for someone. Okay. What is the amount given? 50,000 plus 20,000 is 70,000. So 6,40,000 is your GTI. Claim 80C of 70,000. Correct? Then claim 80E of 10,000. How much is the number? 5,60,000. This 5,60,000 is your qualifying number. On this you can maximum make a donation of 10%. You have made a donation of 25,000. You can make a donation of 50,000, 56,000. You have made a donation of only 25,000. You can claim the full thing. Correct? Amount to be claimed. Number. Therefore, TI is 5,47,500. Clear? Next one. For the assessment year 23-24, gross total income of Chaturvedi is given as 8,18,240, which has a long-term capital gains of 2,45,000 and a short-term capital gains of 58,000. Which of the items are eligible for Chapter 6A? Which of the items are eligible for Chapter 6A? Short-term capital gains is eligible. This is a short-term capital gains under slab. Under slab, only special tax rates are not eligible. This is eligible for Chapter 6A. So how much is the gross total income excluding your long-term? 5,73,240. On this amount is what you need to compute your Chapter 6A. Let's understand what Chapter 6A is. We have gross total income also includes an interest income of 12,000 from savings deposit and 40,000 from interest on FD. Both are eligible for ATTTB provided you are a resident senior citizen with age 60 plus. With age 60 plus, look at the last line. Look at the last line. It says Mr. Chaturvedi is of the age 70 years, which means you are eligible for ATTTB. Amount is 40 plus 12 is 52. You can claim only 50,000. So claim 50,000. Shall we go forward? Mr. Chaturvedi has invested in PPF of 1,20,000 and paid a medical insurance of 51,000. PPF is 1,20,000. Section number 80. C. 1,20,000. Medical insurance is 80. D. Number is 50,000. What is the balance? Chaturvedi also contributed 50,000 in public charitable trust eligible for deduction under 80G and 90,000 to tax saver deposit in the name of Major Son. In the name of Major Son in Punjab National Bank. A first item is 90,000 under 80G. Avane soltam. Next amount is 90,000. What to do? 80. It was 80C, but the problem is it is not eligible for deduction because the investment is happening in the name of Major Son. The deductions is only eligible for your own investments. Deduction is only eligible for your own investments. Investment is happening for son. It is not for you. Therefore, not eligible for deduction. Not eligible for deduction, which means this will become your qualifying limit now. 3, 5, 3, 2, 4, 0. This is your qualifying limit. You can pay maximum of 10% on this, which is 35,324. You have deposited 50. You can only claim 35. 50% of 35, number becomes 17,000. 662. 17,662 is your 80G. Therefore, your total income is 3,35,578. Correct? No. You have your 112 which you removed. You have your 112 which you removed, which is 2,45,000. Number is 580. 580. 5. Question is asking you for total income. This is 580, 580, 580, 580. Compute tax. Okay, question. I don't even want the answer. Compute tax. What will you do? In this 3 lakhs is gone because of basic exemption limit. Number is 35,580 at the rate of 5%. Yes, sir. STCG slab rate only, ma. Yes, sir. At the rate of 5%. Number is 1779. 2,45,000 at the rate of 20%. Number is 49,000. Total 50,779. Claim rebate. Add cess 52810. 52,810. Clear? Careful on these kind of questions, people. Mark and practice at home. Shall we go to the next one? Yes, last question. Mr. Darshan is age 61 years, working with G Limited. Submits the following particulars of investments and payments made by him during the year. Okay. Deposit of 1,50,000 in PPF. 80. C. Payment of life insurance premium of 62,000 on the policy taken on 1st April 2018 to insure the life of to insure his own life. Sum assured is 3 lakh rupees. He's taken the policy after 2012. Sum assured is 3 lakhs. 10% of it is 30,000. He paid 62,000. Amount eligible 30,000. First item is 80. C 50, 1 lakh 50. Second item is 30,000. Can we go forward? Deposit of 55,000 in 5 years term deposit. Same 80. C. Contributed 1,95,000 being 15% of his salary. 15% of his salary. Basic plus DA, which forms part of retirement benefits to the NPS of government. A matching contribution is also made by G Limited. A matching contribution is also made by G Limited. He has contributed how much? 1,95,000, which is 15%. So how much is 10%? 1,30,000. So employer contribution you are eligible for 1,30,000. Correct? Correct? Employee contribution you are eligible for 50,000 flat plus 1,30,000 plus 1,30,000. But I am going to ignore the 1,30,000 because my limit is already exhausted. My limit is already exhausted. Mal ATC is already gone. Mal ATC is already gone. So the balance 10% is anyway wasted for me. I will not utilize it anyway. Clear? Next one. Where am I? On 1/4/2021, medical insurance premium of 1,08,000 and 80,000 is paid as a lump sum to insure the life of his and his wife, aged 58 years. He is of the age 61, his wife is of the age 58, respectively for 4 years. For 4 years. And he has also incurred a medical expenditure of 40,000 on his father, who is not dependent on him. Allowed, not allowed? Allowed. The father does not have a life insurance policy on self. So let's understand what is happening for self plus spouse and parent. Self and spouse, he's paid how much? 1,88,000 for how many years? 4 years. So per year how much he paid? 47. For self and spouse he paid 47. For parent how much did he pay? Hello? 46. Enama? For self he paid, for parent he paid 46. Look at the next line. He spent 6,000 for preventive health checkup of his wife. Of wife. Left side or right side? Left side. How much amount? 5,000. He has incurred an expenditure of 90,000 for the treatment of his mother, being a person with severe disability. Different leg. So this will become 50,000 deduction. This will become 46,000 deduction. Total will become 96,000 deduction. Second is 1,25,000 for mother with severe disability. Amma. அதான் போட்டேன். மொத்த பக்கெட்டே 50,000 மா எல்லாரும். It is not 50,000 per person, it is 50,000 per bucket. என்னடாச்சு? It is not 50,000 per person, it is 50,000 per bucket. Okay, clear? Yes. So what will happen? These are all your deductions. Anything else given in the question? His income comprises of income from salary of 18,50,000 and interest on fixed deposit of 75,000. Problem is he is a senior citizen, meaning he will get an 80 TTB of 50,000. Correct? Yeah, until here it is okay. These items together will become 1,50,000. So 1,50,000 plus 1,30,000 is 2,80,000, 3,30,000, 3,80,000, 4,80,000, 5,05,000, 6,01,000. Huh? Is the deduction 6,01,000? The reduction is 6,01,000. Your total income is 18 lakh 50 plus 75. 22 lakh 25,000. Sorry, 19 lakh 25,000. In this you will reduce 19 lakh 25,000. You will reduce 6 lakh 1,000. Number is 13 lakh 24,000. Clear? Clear? Yes. Would your answer be different if Mr. Darshan had contributed 1,30,000 towards NPS of the government? Would your answer change? No. Why? Because employer was anyway contributing 1,30,000, we claim fully. From employee perspective, we will anyway claim 50 of that 1,30,000. Balance 80 we are anyway not utilizing because it has gone into the part of 80C. Would your answer change? No. Yes. No, yes, sir. Answer will not change. Done? Clear? Yes, this marks the end of your chapter 6A. This marks the end of your chapter 6A. Any doubts? No doubts? No doubts? We have half an hour. 2 more small chapters to complete. 2 more small chapters to complete. First chapter is called as என்னடா chapters pending ஆ இருக்கு? என்ன chapters pending ஆ இருக்கு? 2 small chapters. AMT and 1 more small chapter. 10AA. 10AA. SM ல அங்க தான் வரும். Study material அங்க தான் இருக்கு. My chapter is different. Done? Yes, can we do the balance too? We're into the balance 2 small chapters and then we'll close for the day. We'll close for the day because after that the only thing pending is your TDS return filing. TDS and return filing. We'll discuss how we have to do this probably next week. Probably next week. If at all I get some slots in the during the day, I will. During the week. If I get some slots during the week, I'll do it during the week. Illana, we'll do it on Saturday. Okay. Most likely Saturday, next Saturday, you should have a morning class. Most likely. Most likely. The other batch is completed, so I think the other room is vacant for me. Okay. So most likely we'll have it in the morning slot. I'll let you know accordingly. Clear? Yes. Based on the time, Saturday I'm not giving a timeline. If at all the next class is directly on Saturday, I'm not giving a timeline. We will complete the whole syllabus and go. If at all we are having a morning slot, we will complete from morning till night also. But we will complete the syllabus and go because we need to do TDS, return filing, and then comprehensive questions also. Okay. So it can extend till late night also. I'm sorry, late evening also. Late night, late evening also. It can extend till late evening also if we have a morning slot. If you have a morning slot, if you have an evening slot, coming to that. If we have an evening slot, whatever we can complete on Saturday, we will complete, and then we'll move to Sunday. Then we'll move to Sunday. Clear? Yes. Yes. Starting on this, we are into the chapter called as 10AA. We are into the chapter called as 10AA. This provision basically talks about SEZ. Talks about SEZ. What does this provision come and says? What does the provision come and says? If at all you have an SEZ unit, if you have an SEZ unit which you established before 2021, which you established before AY 2021. If you have an SEZ unit which is established before 2021 AY, in that case, I will give you a special deduction. I'll give you a special deduction. Do one thing. First, to offer all your profits under PGBP. Offer all your profits under PGBP. Then come to chapter 6A. Complete your chapter 6A. And if at all you still have a balance income, if at all you still have a balance income, you can claim deduction as follows. You can claim deduction as follows. Deductions are, for the first 5 years, you will get 100% of the export profit. 100% of the export profit. For the next 5 years, you will get 50% of the export profit. And the next 5 years, you will again get 50% of export profits. So totally this deduction is for 15 years. Totally the deduction is for 15 years. First 5 years you will get 100% of the export profit. Second 5 years you will get 50% of the export profit. Third 5 years also you will get 50% of the export profit. Suppose someone will come and ask, Rahul, you could have said next 10 years. The last leg of 5 years, they have a special condition of SEZ reinvestment reserve. SEZ reinvestment reserve. They're basically coming and saying in the last 5 years, meaning 10 to 15 years, you need to invest the amount into an SEZ reinvestment reserve. So it is not just 50% of profit, it is 50% of profit or the amount invested in the SEZ reserve, whichever is lower. Whichever is lower. But you don't have to worry from exam perspective, last leg not coming for exam. Last leg is not coming for exam, only the first 2 legs are coming, meaning first 5 years, 100%, second 5 years, 50%. What do you mean by export profit? Export profit basically means profit into export turnover divided by total turnover. What is export profit? Profit into export turnover divided by total turnover. That is what do you mean by export profit. Please understand, export profits is only for the SEZ unit. Is only for the SEZ unit. Meaning if the company has a normal unit and an SEZ unit, ignore the normal unit. Ignore the normal unit, come to your SEZ unit, and in that alone you will compute export profit. Don't compute export profit on the company as such. It is on the SEZ unit alone. It is on the SEZ unit alone. It is profits of the undertaking of SEZ unit into export turnover of the SEZ unit divided by total turnover of the SEZ unit. Clear, not clear? 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 Yes. In this they are coming and saying, boss, whenever you have a total turnover, you should whenever you have an export turnover, I will only consider that export turnover which is brought into India. Which is brought into India. Abdina enna artha Rahul? If at all you have paid some charges outside India, transport charges, telecommunication charges, package charges, whatever charges, if you have paid it outside India, the turnover will not come to India, correct or not? In that scenario, export turnover will not consider that kind of income. Export turnover will not consider that kind of income. What are you trying, Rahul? Basically, if the SEZ unit has earned a turnover of 1 crore, in that turnover of 1 crore, 10,000 rupees he paid transportation charges outside India. Appona India la varumbodhu, will you get 1 crore in hand? No. What will you get? You will get 9 crore 99 lakh 90,000, correct? In that scenario, your export turnover will be 9 crore 99 lakh 90,000. Clear? Clear? Yes. In that scenario, a circular comes and clarifies that, boss, if you are going to reduce something from your export turnover, please ensure you also reduce it from your total turnover. Please ensure you also reduce it from your total turnover. Because what does total turnover mean? Domestic turnover plus export turnover. So in that export turnover is nothing but the turnover which you discussed. So therefore they came and said, boss, if you are going to reduce something from your export turnover, please also reduce it from your total turnover. Clear? Clear? The whole chapter is not eligible for 115 BSc. The whole chapter is not eligible for 115 BSc. Second rule, they are coming and saying, boss, 10AA has to happen after chapter 6A. Meaning, you compute your gross total income, claim chapter 6A. After that, if you have something pending, then only claim 10AA. Then only claim 10AA. Nothing pending, no loss for you. Nothing pending, full gone for you. Clear? 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 This is the end of the chapter. Chapter. Nothing great about this chapter. Yes, this chapter is basically a giveaway in exam. It's a giveaway in exam. Exam le just take your number, multiply, divide, and answer is over. Yes, two of the most easiest things in exam, slump sale, 10AA. Manda apdi tooki poda. You don't even need to know income tax for it. Accounts padcha porom. Adha accounts serino adu vera vishayam. You need joke. Stand-up comedy போயிட்டு இருக்கு. இப்போதான் accounts பத்தி jokes சொன்ன, நீ கேட்கல. Shall we? Yes. Rudra Limited has one unit at SEZ unit and another unit at DTAA. Oh, you want a joke? No. Next question. Next question, you will understand the joke. Sorry, da. புரியலடா. நெக்ஸ்ட் क्वेश्चन ஜோக்டா. क्वेश्चन ஜோக் தான். உங்களுக்கு ஜோக் ரிசல்ட் தான், வேற ஒண்ணும் இல்ல. For you people the joke is only the result, nothing else. Yes. Question number 1. Rudra Limited has one unit at SEZ and another unit at DTA. The following details are provided to you. Rudra Limited or a total turnover is given as 6 crores. Export turnover is given as 4.6 crores. Net profit is given as 80 lakhs. DTA unit or a total turnover is given as 2 crores. Export turnover is given as 1.6 crores. Net profit is given as 20 lakhs. What do you supposed to do? Find the SEZ turnover. 6 crores minus 2 crores is 4 crores. 4.6 crores minus 1.6 crores is 3 crores. Net profit is this is what is 4-mark question. Look at the question. Calculate the eligible deduction under 10AA for the following cases. If both the units are set up in 2015, both the units are set up in 2015, the deduction will start from 15, 16, 16, 17, 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23. How many? 7 years then. 15, 16, 17, 18, 19, 20, 21, 22. 8 years. Sorry. It is 8 years. If you are into your 8th year, you are eligible for a deduction of 50% of what? Export profit. What is your export profit? 60 lakhs into 3 crores by 4 crores. Sixteen to 3 by 4. 45 then. 45. So you are eligible for 45 lakhs as your export profit. You are eligible for 50% of that. So 22.5 lakhs. What will happen if the units were set up in 2019? 19, 20, 20, 21, 21, 22, 22, 23. You are in 4th year. Therefore, you are eligible for 100%. Number will become 45 lakhs. Exam over. 4 marks out. That's all is the answer. Basically 4 marks they gave you to do calculator. And the Rudra minus DTA பண்றதுக்கு உங்களுக்கு 4 மார்க் வந்தா சூப்பர்ல. That is why the second question is a problem. That is why the second question is a problem. Look at the second question. Krishna furnishes the following particulars for financial year 21-22 and 22-23. Which is your year? 22-23. In respect of an industrial undertaking established in SEZ during the financial year 17-18, which means 17-18, 18-19, 19-20, 20-21, 21-22 is 5th year. 22-23 is 6th year. So this is 5th year. This is 6th year. Yes. Yes. This one will be eligible for 100%. This one will be eligible for 50%. Clear? Look at the question. It comes and says total sales is 60 lakhs and 85 lakhs. Export sales is 48 lakhs and 55 lakhs. Domestic sales is 12 lakhs and 30 lakhs. Money received in India in convertible exchange up to 30th September 22 and 30th September 23 is given as 43 lakh 20,000 and 40 lakhs. What is the relevance of this? What is the relevance of this? Let's discuss. Profits of the undertaking is 6 lakhs and 10 lakhs. 6 lakhs and 10 lakhs. Your total sales for the financial year 22-23 includes a freight of 5 lakh rupees for delivery of goods outside India. You are required to compute the deduction for Krishna under 10A. That's all. You are required to compute the deduction of Krishna for 10A. Which year do you want to do? You tell me, da. Which year do you want to do? Why? 21-22? Your choice, ma. You are only supposed to do. Why? Why? Question says compute the deduction. Compute the. Did it clarify that you want the deduction for 21-22? உனக்கு யார் பண்ண சொன்னா? அப்போ ராகுல் எதுக்காக இன்ஃபர்மேஷன் கொடுத்தாங்க? அந்த கேள்வி இருக்குல்ல. Honest mistake. Honest mistake. This is one of the exam questions. One of the exam questions. One of the worst exam questions ever made. Question basically came and gave you 2 years information. What is the expectation? Do both the years. Do both the years. When the answer key came out, you know what they did? They only gave the answer for 22-23. Yeah, no? The question reads to compute the deduction for 10A and has not clarified whether which year the deduction is to be computed for. If you notice the question paper first line, it comes and says all answers are to be prepared for assessment year 22-23. Since nothing has been clarified, this information is not relevant for the exam purpose. True. Honestly true. Honestly true. As a student, with you being given both the information, what is the expectation? You are asked to solve both. And in fact, for a question like this, in the mock question, calculator podadukku 4 mark kudukrana, definitely they want both. But what happens in ICI is the person who prepares the question paper is not the person who sets the answer key. So the person who set his answer key had another ego. He came and said, who are you to tell me what I am supposed to do? Nee question tappa kudutha, I will play with you differently. Adha sonnalle, always do the wrong thing in the right way. You did not clarify in the question which year do you want for. Did you clarify? Did you clarify? ICI question paper itself comes and says all answers are to be for assessment year 22-23, which means I will only do it for 22-23. Unukku kekla na panla avladhan. Worst questions. Worst questions. Exam came and said only prepare for 22-23. But how does a student know? He will not know. What will you do? You will prepare for both. The mark you will get only for one. Mark you will get only for one. Fortunately, it's an easy question. Adanala rendu question panalo prachana illa. But the problem is not there. The problem is question itself is wrong. The problem is question itself is wrong. What did I tell you? You have to do 50% of export turnover, export profits. What is 50% of export profits? What is your export profit? Hey, what is your export profit? Path the question update theriyudhu. What is your profit of the undertaking? 10 lakhs into export turnover divided by total turnover. Correct? What is your export turnover? What is export turnover? Ideally speaking, your export turnover is 55. Ideally speaking, your export turnover is 55 minus the 5. Minus the 5 which is there on the bottom. Minus the 5 which is there on the bottom. ICI comes and says, no, boss, your export turnover is 35 lakhs. Your export turnover is 35 lakhs. What is the 35 lakhs? The 40 lakhs which you received in India minus 5 lakhs of freight. Minus 5 lakhs of freight. Please understand, when I told you that you have to receive the money in India, did I clarify a due date? Did I clarify a due date to you? No. I did not clarify a due date because there is no due date. Because there is no due date. 10AA comes and says money should come to India. But it never clarified when the money should come to India. When the money should come to India. Before 10AA, there was a section called 10A. There was a section called 10A. In that 10A, they clarified that you need to receive the money within 6 months. Problem what happened is the person who prepared this question paper actually copy pasted this from the practice manual of 19s. He copy pasted this practice manual. I think 10A is scrapped in 2006, I think. 10A was scrapped in 2006. So practice manual before 2006 will have this question. Because that time 10A had the provision of bringing it into within 6 months. Now there is no such provision to bring within 6 months, which means technically speaking, I don't care about that 40 lakhs. I can care about only 55. I can care about only 55. Correct or not? Correct or not? Here ICI comes and plays differently. And the exam set under the answer key, what he came and said, boss, I know 6 months is not the criteria. I know 6 months is not the criteria, but I know what FEMA tells. What is FEMA? Foreign Exchange Management Act. In FEMA, the provisions come and say that the money should receive in 9 months. The money should receive in 9 months. Unukku theriyuma? Do you know? No. In the answer key, they said as per circular number 12/DEFT/2029/2002, other over period circular dated 17th May 2019, I think 17th May 2019. It is clarified that any kind of money which is outside India should be brought into India within a period of 9 months. Seri, okay. You should bring it within 9 months. April and the 9 months arambicha, what is the date? December. What is the date given here? September. Can you sit in September, tell what is the money you will get by December? Examiner comes and says, as per the circular, the money should be received within a period of 9 months. The question only clarifies up to 6 months, which means there is no facts available. I am assuming 9 months also nothing came. I am assuming 9 months nothing came. That is examiner's answer. That is examiner's answer. I am assuming 9 months nothing came. Next 3 months nothing happened. 6 months you got 40 lakhs. 3 months nothing you will do. Nothing you will do. You are ready to violate FEMA, it seems. FEMA is telling what 9 months kulla vaangi aagano illana enna penalty vandrum. Examiner enna solraru? Vaangida penalty enna prachana unukku? Potu thola avladhaan. They are coming and saying next 3 months nothing came. Take penalty, big deal, no problem. For me nothing came, so therefore I will assume the turnover as 40 lakhs. Answer left, 40 lakhs became the answer, minus 5 lakhs became 35 lakhs. Whereas you should technically take it as 55 lakhs. You should technically take it as 55 lakhs. Your choice. This was only once it came. This came only once, and that time screwed up for everyone. That time screwed up for everyone because people wasted time on doing 21, 22 also. People screwed up doing nothing because the problem is people like you. In the line, Rahul. You don't know what to do. What will you do? I don't know what to do. I don't know what to do. You'll sit on it for the next 2 hours. How much is the weightage of this? 4 marks. How much weightage is this? 4 marks. How much minutes do you have? 6 minutes. What did you do? Adu or comedy. Adu or comedy. I'll come to that. Adu or comedy. Basically what happened, this is what happened. 4 marks question, 6 minutes given to you. In this you could have easily scored 2 marks just by writing the provision. 100% of the export profit, 1 mark vanduchu. What you would have not got for is the computation. Okay, idhula second comedy enna, we are coming and saying what? We are coming and saying what? Boss, money received in India. Money mottaya eldirukku, it is 40 lakhs, which means it is come in India. So your turnover should be how much? 40 lakhs. It is assumed that the 5 lakhs is already out of this. Then only you receive this 40 lakhs. No. Hello. Here also he'll put an assumption. He came and said, no. Money which you got in hand is the actual turnover. 5 lakhs is not reduced, so I will reduce other. This question had 3 big mistakes. Mistake number 1, you told 21, 22 not to consider. Mistake number 2, you itself made an assumption next to 9 months nothing came. Third mistake, money is clearly said as brought into India, but you're still reducing 5 lakhs from it. That is why next time it didn't come. We all complained. Everyone went and blasted off them saying that, boss, this is one answer key which you have prepared, you don't even have sense to it. This is suggestion answers. And the worst part is, generally when these scenarios are happening, imagine how many computations are there. One computation you have to do 21, 22. Second computation you have to do what? Take 55 lakhs minus 5 lakhs. Then you have to do 40 lakhs. Then you have to do 35 lakhs. 3 computation irukku. Yes or no? 3 computation irukku. So which means you have to give 4 different answers. So suggested answers should have how many combinations? 4 combinations. Then only you will get full marks. Suggested answer has only 1 combination. What is that combination? 10 lakhs into 35 lakhs divided by divided by 80. What is 85? 5 lakhs yaar pannuva. I told you total turnover means what? Reduce 5 lakhs. So it is 85 lakhs minus 5 lakhs, so 80 lakhs. Hey, inge and all you cannot make an assumption money is not there. It is there. It is there. 50 lakhs is your total export. Adulende 5 lakhs remove panni da agano. So denominator will not change. What will change? Numerator will change. Worst of the questions which came in exam. Okay, exam portha varaiku ICI answer was 10 lakhs into 35 lakhs divided by 80 lakhs. What is the number? 37,500. 37,500 is your export profit. This is the 6th year of business, so 50% of it. என்னடா பண்ற? 4,37,500 is the export profit, is it? 4,37,500 into 50% is 2,18,750. 2,18,750. One of the worst questions ever came in exam, but once and the last time it came. And this is the cursing which I'm doing only for 2 more attempts. This attempt and the next attempt is the only place I can curse in, because income tax is amended. 10AA now is have an infinite provision. They have captured whatever mistakes ICI did. So now they itself came and said ICI evlo poranga nangle maridom. And ICI devta. Okay, if ICI tells that this is the answer, then let's change the answer. Income tax maritanga. They amended income tax itself. Worst part is this amendment, this provision is useless now. 10AA, I told you, you cannot have an establishment after 2021. Technically, the provision itself is useless. The provision itself is not valid. Yes or no? But income tax said, no. ICI is making mistakes, let me change. I will change. 3 years later, now they're changing the provision. Now, next May, I will not be putting this question itself, because the question now becomes right. This number is right. Next year, not this year. So which means November, if you're coming back, I will again keep blaming this. November, again, you will see me screaming on this. Next May, I will not scream on this. Okay, next May, income tax itself has changed. Do you want to know? But this marks the end of 10AA. I'm just going to quickly complete what do you call as AMT. I don't have sums on this, I think. I have only one sum. We'll do it along with our full-fledged. Last chapter called as AMT. Before I start the chapter itself, let me clarify. AMT not applicable for 115 BSc. That is why if you notice the golden rules, I would have come and said it is 9 or 10, whichever is higher, compared with 11, whichever is lower. Normal provisions you should check for AMT. 115 BSc, you don't need to check for AMT. Clear or not clear? Clear? Yes. What does this provision of AMT come and say? They're basically coming and saying, boss, in income tax, we are giving some special deductions to you. Because of which the income is coming down. And government is incurring losses because government is not getting revenue. So income tax came and said, boss, I will introduce a special provision called as AMT. Where I'll tell you, boss, ignore all those exemptions. And now compute a new tax. Bare minimum, give me this much at least. If you are giving me more than that, I'm great. If you are giving me lesser than that, I bare minimum need this much. This is called as alternate minimum tax. What does this mean, Rahul? Yeah. Let's say you are in year 1. You decided that your tax in normal is coming as 100 rupees. In my terms, 100 means gross. Let's say, for example, the tax is coming as 100 rupees. Income tax came and said, boss, I'll give you a special computation. In that special computation of AMT, if it comes as 150, I expect you to pay 150. Clear? I'm in year 2. I computed my tax as 80. Government said you have to pay 130. Government is expecting 130. You are ready to pay 80. Government will expect 130. Yes or no? You are in year 3. You are ready to pay the government 120. Government is only expecting 80. Will you pay 120? No. Why will you pay 120? You will come and say, Day, in year 1 and year 2, when I was ready to pay something, you asked me more. Yes or no? In year 1 and 2, when I was having a different tax, you expected me to pay more. Now in year 3, when I am paying more, why are you expecting so much? Correct? So he will come and say, whatever extra I paid, first give me that back. How much extra did I pay? Year 1 I paid 50. Year 2 I paid 50. Year 2 I paid 50. Totally extra I paid 100. I will go to government and come and say, Day, I have already paid you 100 extra. You are expecting me to pay 120. Will I pay 120? No. How much will I pay? How much will I pay? Will I pay 20? Will I pay 20? If I go to government and say I will pay only 20, government will come and say bare minimum I expected from you 80. So at least pay. Here I will pay 80. Here I will pay 80. If I pay 80, how much I have benefited? 40. Which means out of the 100 which I extra paid, 40 has come back to me. Yes or no? Yes or no? Come to year 4. Come to year 4. In year 4, you are ready to pay 350. You are ready to pay 350. Government is only expecting 50. Government is only expecting 50. You are ready to pay 350. Why, Rahul? Simple. 10 AA would have gone for you. 10 AA would have gone for you. Therefore, you are expecting to pay 50. In this case, will you pay 350? Will you pay 350? You will say what? I am still balance left with 40. 60, sorry. I am still balance left with 60. Will I pay 350? No. I will say first give me the balance 60. Give me the balance 60. How much will the number? 290. Government is expecting 50. You are ready to pay. Government will expect 290. Done. Done. What this 50 and 50 is nothing but AMT credit. What this 50 and 50 is nothing but AMT credit. Income tax is coming and saying whatever tax you pay under AMT which is over and above your normal will be treated as an AMT credit. Can be set off in the year in which your normal tax becomes higher. Normal tax becomes higher, but at any given point of time do not set off so much that you do not pay me the balance bare minimum AMT. Do not pay me the bare minimum AMT. Clear? Not clear? Clear? Yes. Let's do some examples quickly. See the example. Your normal tax is 2 lakhs. Your AMT tax is 175. Government is expecting 175. You are ready to pay 2 lakhs. Will you pay 2 lakhs? Yes. What will you pay? 2 lakhs. Next year, you are ready to pay 3 lakh 50. Government is expecting 4 lakh 35. Government will ask you to pay. You have paid extra. How much? 85. This 85 is nothing but AMT credit. Next year, government is expecting 5 lakh 28. You are ready to pay only 4 lakh 47. Government will expect you to pay 5 lakh 28. How much extra have you paid? 81 extra you have paid. Already you had paid extra of 85. Total it up 166. Done. You are ready to pay 5 lakh 11. Government is expecting you to pay 3 lakh 56. Will you pay 511? What will you say, government? I have already paid 166 extra. Remove the 166. How much is it coming to? 345. If you tell the government that you will pay 345, government will come and say, I want 356. So bare minimum you will pay. How much were you not able to utilize? 11. Yes, sir. Next year, you are ready to pay 578. Government is expecting 535. Will you pay 578? You will say what? I have 11 pending. How much will I pay? 567. No credit left for me. No credit left for me. Last scenario. You are ready to pay 612. Government is expecting you to pay 61. You will pay. Do you have anything to set off? This is the answer. Clear? Question. How much period can this AMT credit be carried forward for? It can be carried forward for 15 years. It can be carried forward for 15 years. Meaning one AMT credit of year 2 will carry forward for 15 years. Meaning year 17 variko you can utilize. If you are not able to utilize, lapsed. It will be lapsed. Clear? Clear? Yes, 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 yes. This is provisions for AMT credit. This is the provision for AMT credit. Now to understand how do you compute this 1,75,000 and these numbers. How to compute these 1,75,000 and these numbers. Government comes and says, boss, AMT tax is equal to 18.5% of your adjusted total income. 18.5% of your adjusted total income. What do you mean by adjusted total income, Rahul? They say, boss, start from your total income. Start from your total income. Tell me what are the big deductions you can claim. First biggest deduction 10 AA. Not allowed. Next biggest deduction, 35 AD. Not allowed. But the problem with this is 35 AD is a capital deduction, correct? Is a capital deduction. If you are going to remove the 35 AD deduction, you need to treat it as a normal business, which means you are eligible for okay. What they're coming and saying is treat your business as normal business. If you treat your business as normal business, it will now be eligible for depreciation. It will now be eligible for depreciation. So what they are saying was take your total income, add back your 10AA, add back your 35 AD, claim your depreciation on 35 AD, and add back any kind of heading C of chapter 6A. Heading C of chapter 6A. For your exams, it is 80 JJAA, 80 QQB, 80 RRB, 80 QQB and 80 RRB. These three items you will reduce, claim your deduction depreciation on 35 AD assets. This will give you your ATI. This will give you your ATI. What is ATI? Adjusted total income. On this adjusted total income, you need to compute 18.5%. You need to compute 18.5%. That is your AMT tax. That is your AMT tax. Clear? Clear? Who does this provisions apply to? They are coming and saying it applies to individuals and firms. It applies to individuals and firms. Individuals only if you are claiming these deductions. What deductions? 10AA, 35 AD and heading C. If you are claiming these kind of deductions and your adjusted total income goes beyond 20 lakhs. Adjusted total income goes beyond 20 lakhs, you will do AMT. If it does not go beyond 20 lakhs, ignore. If you don't even claim these deductions, ignore. When it comes to firms, they have come and said if you're claiming these deductions, you need to check for AMT. If not, don't check for AMT. What I'm trying to tell you is just because you have an AMT, don't always check for it. Don't always check for it. Check whether in your question you have 10AA, 35 AD and 80 JJAA, QQB and RRB. If you have any of these items, then you check for AMT. If not, don't check for AMT. So in my book also, golden rules, when I would have said step 9 and step 10, 10 is subject to this condition. 10 is subject to this condition. Clear? Not clear? Clear? And the provisions are clarifying that if you are opting for 115 BSc, AMT will not apply. AMT will not apply. That's all the chapter. That's all is the chapter. Nothing else in the chapter. Any doubts? No doubts? Clear? Yes. Let's take this example. I have scenarios. 1 scenario, 2 scenario, 3. Just a second. Just a second. I will be completing, right? You have your normal tax. You have your 115 BSc and you have AMT. Normal tax 115 BSc and AMT. Normal tax is 2 lakhs. 115 BSc is 3 lakhs. AMT is 1 lakh. Second scenario. Normal tax is 1 lakh. 115 BSc is 3 lakhs. AMT is 2 lakhs. Third scenario. Play match, mix match. What is the next scenario? 1 lakh, 2 lakh, 3 lakh. Then all done. One scenario number 4. No, 2 lakh, 1 lakh, 3 lakhs. Correct? One more scenario. What is the scenario? Varama. Scenario number 5. 3 lakhs, 2 lakhs, 1 lakh. Scenario number 6. 3 lakh, 1 lakh, 2 lakhs. What is the tax you will pay? Final number. First scenario is by you will do normal or AMT, whichever is higher, therefore 2 lakhs, and then you will compare with 115 BSc. Normal is beneficial, therefore you will opt for 2 lakhs. Next scenario. Sure? You will pay for 2 lakhs, but you will get an AMT credit of 1 lakh. Correct? Scenario number 3. You will opt for 115 BSc and pay for 2 lakhs. Scenario number 4. Scenario number 4, number is 1 lakh. 115 BSc is giving you a better option, so pay for 1 lakh. Scenario number 5. Same 115 BAC, 2 lakhs. Last scenario. Clear? Yes. This is how it works. This is how it works. Careful on how you do it in the exam. Okay. You need to check for normal or AMT, whichever is higher. Compare with your 115 BAC, whichever is. Done? Done. One small thing which I wanted to clarify in AMT credit. Please understand, people, 18.5% is on the full ATI. 18.5% is on the full ATI, meaning if at all the total income has your long-term capital gains, will you tax it at 20%? No. You will not tax it at 20%. You will still tax it at 18.5%. Government is bare minimum expecting 18.5. They are not discriminating between any income. They are not discriminating between any income. Any income you have, everything will be taxable at 18.5. Everything will be taxable at 18.5. You will check for the special tax rates only for 115 BAC and normal, not for AMT. Not for AMT. AMT Puerto Rico, everything is taxable at 18.5. Clear? Clear? Go through this chapter when you come before the next class. I don't have sums to do in this. One big sum is there, which we will do with the balance. When we do our comprehensive questions. Clear? Yes. With this, we are pretty much done with our chapters. I don't have anything else to discuss. Technically, you're done with 55 marks of your syllabus. 5 marks is tedious. You take a choice. Whether you want to do it or not is a choice in an exam, because it is an optional question. Whether you can put it in this question, you can put it in another question. Technically, if you ask me, 60 marks are done. 55 marks is what I will say because of TDS only. Why I am keeping the balance 5 marks buffer is because you have an amendment for the current year in return filing. In return filing, you have something called as updated return. I'm keeping the 5 marks buffer for it on a contingency that will come this attempt. And the balance 55 marks, we're pretty much done. But yes, we need to solve full-fledged questions. Unless we solve full-fledged questions, you will not get the hang of it. So we need to solve some full-fledged questions, which the target is for Saturday. Before Saturday, 1 week you have whole book, go through and come. Okay, complete your full book and come, except for TDS and return, obviously. Please do go through your whole book and come. Your TDS and return will not impact your full-fledged question. Everything else is covered for you. We have completed the syllabus technically. So your full-fledged question, compulsory question is already ready in your hand if you prepare and come. Okay. So before your next class, please prepare your full book and come so that we can do it. Clear? Any doubts? Thank you, people. Have a great weekend.